Yeah. Can you guys hear me now? My goodness gracious. Good afternoon, good afternoon, good afternoon. Mic check, mic check. Thank you for that. Welcome, everybody. We are looking at War Room number 60. Like, literally, we're in War Room number 60, which is our last War Room, for the year. No, not for the year, for the first financial quarter. Sorry, I got thrown off with the whole no sound situation there. I do apologize, right? This is our last week of the first financial quarter of 2022. And in my humble opinion, it's been such an incredible financial quarter. Not the most profitable financial quarter for me, but definitely the most eye-opening. I learned more in this financial quarter than I think historically any other financial quarter, at least dating back to about 2019. The main elements are inflation and the war, right? And just general legislativeness in this so-called lost decade that we're in, right? So it's been absolutely amazing. And I don't know how often who's watching, you've been following our traders war rooms. But I'm hoping that they're giving you insight. The last thing I just want to bring up in the introduction is that this financial quarter presets the tone for the second financial quarter, given that on Friday is the 1st of April, and we get to start off the first month of the second financial quarter with a big jobs number, right? And that jobs number, guys, is absolutely important. The Fed is nowhere close to getting out of the hot seat. They'll be looking at inflation targets, etc., etc. So it's a very long, winded road ahead. And it's stuff to look out for. So please do, tune in. So maybe on Wednesday this week, we'll then start to slowly discuss my usual outputs and predictions for what I think will happen in NFP. We'll also cover, ADP that always drops first on Wednesday. Later on during the week. Today, I just want to kind of like keep, our traders war room a little bit more simple, head back to basics, look at all the currency indexes individually, and then look at a couple of pairs. I find that, once in a while, that's absolutely important. All right, so let's get started. If any point in time I say something you like, please don't be shy to hit the like button. Right, so in front of me, I've already got the week ahead, right? Alan, Lincoln, Alvin, everybody, good to see you on the live, guys. Good to see you on the live. Right, so we've got okay, fine, some pound talk. The last kind of like listing of job openings in the United States. Then on Wednesday is really the big deal. The ADP non-farm payroll is going to kind of like kickstart on Wednesday. And remember how they look at things, and the sectors and the surveys they run are not always a pre-indicator of NFP, but it's just something so important to look at, right? Because 9 out of 10 times, sometimes, it shows some type of inclination, right? We know that the job numbers have been good, basically since the beginning of this year, right? I know economy has struggled, but the job numbers in the United States have been very good. And then on Friday, on Thursday, there's a little bit of, core PCE price index, but it generally doesn't do, much, especially in a week like NFP. These will be the big hitters. You're going to get non-farm payroll. Look out for that. They're looking to score under again. You'll recall last month, right? They were looking to score under again, but they went all above. The forecast was 407, but they actually got 678, right? So now they're trying to get back to their previous forecast of 485, which means, deep down the markets know inflation is high, prices are too high. When will labor start to suffer, right? They keep pricing in this weird downturn, right? So there you go again. A forecast to say actually the job numbers are going to come back far much more terrible than we expected last week. And you got ADP playing it down as well. Remember, ADP was the same one that got it wrong about a month ago, and then in the last one where they got it right, they said they amended their February forecast, right? So they got 45K. And NFP is looking at getting about 485, right? So this time the difference actually matters. Last month it didn't matter because what NFP was targeting, ADP had already hit. And ADP once again gets released 2 days before NFP. So you know, it was kind of like an easy prediction. But this week, you know, a lot of thought has to be put into these job numbers, right? So just kind of like watch out for that in terms of this coming week. But like I said, if you're, you know, watching, you know, frequently on the channel, you know, I will give you guys my usual predictions Tuesday, Wednesday during the week as usual. And so far, we've done very well with NFP, you know, predictions on the channel. Right now, let's just catch up with a couple of things, and then, you know, I'm going to talk about what I really, you know, what's on my heart sometime today, and then we're going to look at a couple of charts, and then we're going to talk about signals, and we're also going to talk about our trading strategy. I saw something interesting on social media last night before I went to sleep, and I thought, well, let me address that. Granted, I'm pretty sure it was not directed to me, but, you know, why not use you know, this platform to kind of like speak to it. So that's kind of like what I want to do in this war room, give out signals and cover the markets, right? So Blinken says US is not seeking regime change. Yeah, sure. It's the same America that seeks out regime change in Africa, Afghanistan, Iraq, Israel with Palestine. It's the same America that does not care about regime change in Russia. No one believes this. I don't think anyone should believe this. Guys, the whole Russia thing, okay, there's a peace talk on the table. If the peace talk happens, you are guaranteed a rally. You are guaranteed a rally. If the peace talk agreement comes through, you are guaranteed a rally, right? There really isn't much left. Now, I mean, I guess today I'm going to be forced to teach because I really want to. Mama Eunice, I am days away from releasing your baby. Module 3, days, literally days. Like I was looking at it yesterday, days away. Good to see you. A lot of you, if you do enjoy module 3, take the time to thank Eunice. She was the one who cornered me a long time ago and told me swing trading is great, but create something for day traders, right? So I'm done. Recordings have been uploaded. We actually moving our whole teaching platform, but you guys will get the details in the next few days. So it's quite exciting. Right now, like I said, today I'm going to have to do a little bit of teaching, man, because, you know, there are a couple of things that I need to make clear. Ladies and gentlemen, markets do not have a problem pricing in negative news. All right, it's this weird, you know, psychology in the markets. I mean, we'll cover it in module 4, but I want you to know that good news is priced in equally as bad news in the markets. Markets don't care. Right? It's not that because it's bad news, markets are going to go crazy. What markets struggle with is uncertainty, like not being clear. Are we going up? Are we going down? Is the Fed going to do the interest rates? Is there a war tomorrow? Is the war going to stop? Is the war over? That is where you get, you cringe the market in many ways. But classified bad news that is clearly communicated is priced in. Really good news that is clearly communicated is always priced in. And those of you who know, my teaching, you've already done my module 1 and module 2, you'll know that PE, prices in everything, right? So it's literally a known fact. Markets will price in everything. Now, I'm not walking you guys down memory lane for the fun of it, right? But I just want you to see where I think markets are going. Number one, on the 14th of February on the channel, I think I said markets are bottoming, insider traders buy now. That's the title of the video in Feb, right? And right at the end of that video, the video is only an hour, I said we are 30 days away from a market recovery. If you go to all your charts on the 14th of March, you will see I was incredibly accurate. This is going to be my best trade call of 2022. I promise you this, right? So markets have started bottoming out, right? And you can see it in different things. So let's go, to typical movers like the NASDAQ, number one. And then, I won't do anything. I've already done this on social media, so I won't, go through every single example with you guys. But I just want you to start thinking along where I think price is going to be. Why? Because remember, banks think in 3 months, take profits in a year. So you have to almost, why do I always, let me just quickly focus. NASDAQ, my mind is everywhere today. My mind is everywhere today. Where's my broker? I'm not winning. All right, let's go to index. Right, so it's absolutely important. Please don't forget, right? Markets pricing everything. Markets pricing everything. But more importantly, banks think in 3 months, take profit in a 1-year trading strategy, right? So we are now about to enter the second 3-month phase in the markets, the second financial quarter. And that's absolutely a big deal. It is a non-negotiable. There are big meetings that have been happening to prepare for this, not just banks, but hedge funds, not just hedge funds, but massive individual investors. That's the money that's going to move the money. Like if you look at this bottom in Nasdaq, you'll see for yourselves ever on the 14th of March, S&P 500, Dow Jones, Ethereum, Bitcoin, all your risk assets, Euro USD, all of them on the 14th of March, 30 days from exactly where I say the markets are going to start to find a bottom, right? You're going to see the same chart patterns play out. Now, because, and I'm just using Nasdaq because I know it has your attention, right? I know retail traders are madly in love with this thing. I mean, it's nowhere, you know, amazing or less amazing than other indices, but I know this is the one that rocks people's world. So let's look at it. Now, what you want to see, ladies and gentlemen, for the next 2 weeks, and 2 weeks is generous. What you want to see is you want to see one or two things. Number one, you want to see a slight pullback like that, right? Which is fine. So anything above 1400, anything above 1400 is a clear good sign, right? If markets could drop lower, don't get me wrong, markets could drop lower, and if they do drop lower, then you do want all these resistance points hits for retail traders. 365 traders, you know that we've got an unfilled order block here, which is where I want to buy. All right, but I'm just giving you the speculation, not what Leroy wants to do. I'm just giving you what I think markets, the options that markets have. The healthy approach for markets right now is to consolidate, right, for 3 days, 2 days, for a week, right, but not to go too low and not to go too low too fast. You want to see some type of consolidation. That's option. If you don't get option one, you want to see a pullback, a healthy pullback. That's healthy pullback number one, which is about 50% of this distance between the swing low and the potential contact of these supplies, right? So that's pullback number one. Pullback number two is the one that I really want to get into, where I'll start to buy right there. Right now, these buys would be so much more attractive, so much more safer, so much more clearer if we first break supplies. Right, and that's it. It's as simple as that. It's a patience game. You wait for that to happen. If it doesn't happen, you take an educated risk. So if supplies don't break, right, but you're looking at your sentiment with me in the mornings, you know, or at least the stuff that I've taught you to look for those of you who've been attending the free intraday sessions, then you will know that a pullback to these levels somewhere here is healthy. I'm pretty sure somewhere on this line here, 14,100 is an H1 or H2 demand. I'm pretty sure. If I go to the 1 hour time frame, there must be something there. If it's 50% of the leg, there we go. So there's that 1400 area. Right inside the 1400 area is a very beautiful fresh area of value, right? So you know, this is a good place to take a risk, right? If you get stopped out, you know, it's part of life, but it's a very good place to take an educated risk take, right? So you want to see something like that happen. At the same time, you know, if you're a prayer warrior, you want to start praying for the peace treaty to go through, because if it doesn't go through, if the peace talks fall flat, there isn't nothing left in the markets, guys, to be priced in. All the bad news has been priced in. We saw it many times. I've taught you guys about market capitulation. We saw retail traders give up towards the 1st of February, right? That was the last time we saw significant buying where those stocks could not hold anymore. So right now, all it is markets have priced in the most bad news that they can, and markets now want to go up. If you go one step out on your weekly time frame, you will start to see much more clarity on the Nasdaq, right? On the weekly time frame, we have, for the first time since the decline of Nasdaq and a lot of these assets last year, not January, last year, November, for the first time, we have our first buy order block on the weekly time frame. And that's big, right? Because without this a roadblock on the Nasdaq, but please, again, I'm using it as an example, on all your risk sensitive assets, it's there. Without this sign here, markets could potentially keep following a governing path to the downside, right? But now that Nasdaq has given us a strong weekly demand, And if you see that 1 hour order block sits just above this base here, that's why I'm saying, it would be nice to see some type of pullback into the zones here. That would be a nice safe buy, right? My buy is extremely hopeful and might not happen. So I'm going to have to buy at both places. Excuse me, buy here first, but risk a little bit and really take serious buys down here if markets get down there on the daily time frame, right? But for the most part, structure is giving us some type of bullish sign, some type of signs that, all right, we get it now, we get the war, we understand everything, but for now, we would like to start to make our way back to the highs. All of this is stringent upon still sentiment about the war, right? So, and that's just the unfortunate part. As long as there's this war thing going on, and specifically now, we just want to hear that there's a deal, want to hear that America is moving on with their lives, want to hear that Russia is pulling out. Anything outside of that, anything that threatens the peace deal would incline markets to move a little bit. But then again, even that, like I'm saying to you guys today, is priced in. I don't see that much room for blood, unless if Russia goes out of textbook. So they start doing bomb raids, nuclear, all the crazy things that no one wants. Then markets will start to flatline. So be careful of this, which means Bitcoin might be moving towards the 50, the 50,000 areas, etc., something to kind of like bear, keep at the back of your minds. All right. So that's one big important announcement that I want to get out of the way before we start looking at signals, is the mere fact that we are at that market bottom that we spoke about, and there are sentimental changes in price. And these next 2 weeks, the last week of the financial quarter and the first week of the second financial quarter, are absolutely crucial. It doesn't help that we're getting a big FOMC data specific document called NFP, right, where all these things will be coming, because very soon we're going to have CPI, and very soon we're going to have a new FOMC meeting where they might or might not give us 0.25 or 0.50 as covered in the channel, right? In terms of sentiment, I'm not going to spend time because it is long-term swing trade, so sentiment of today could change by the time markets trigger us. But I'm just going to go through the first few headlines just to ground us on how markets ended on Friday, right? US equities continue to show resilience. As you can see, this is what they're talking about, right? Markets are pushing up outside of supply, 2 significant supplies. We've got a nice, strong bullish engulfing pattern on top of a bullish engulfing pattern. So buyers meeting bears head on head, right? Literally head on head. I wouldn't do anything right now unless you are extremely risk tolerant, right? And if you're looking to take sales, the only logical sell will be to sell as high as possible away from all these buy orders, but each to their own. But in this entire zone, I'm doing nothing. I am praying that markets first break to the upside before coming down. But if that doesn't happen, I will adjust my strategy and then start to look for buys anywhere from this red zone going down. All right, I want to buy as close as I can to where all the low buys are. All right, so I will not be buying over here. I warned against this zone. It clearly worked. So if you're a cowboy and you took this buy, good for you. I did not, right? I never buy, so close to a supply. But that's all that headline means. Risk assets were resilient on Friday. All right, non-farm payrolls, I've spoken about that. Look at this. Germany is saying, look, man, we're going to become independent from Russian gas faster than many think, which is interesting, because then sanctions could really start to matter, right? If someone like Germany now is okay with removing Russia from SWIFT and also sanctioning Russia in terms of fossil fuels, that could sting. On the other side, Russia, I saw on Bloomberg, on yesterday when I was reviewing charts and all that kind of stuff, I saw Russia, Putin was saying, every international country is going to have to pay for stuff in rubles. Oh, there we go. There it is right here. Russia demand to be paid in rubles will be the key theme next week. I think that's a big move, right? You devalued our currency, good for you. Now, everything that you want, our gas, our oil, our this, our that, everything you're going to have to pay it in our currency, right, to restabilize, the ruble, which is, I guess on their part quite smart, right? Apart from that, gang, there's really not much going on. I don't want to waste too much time. Oil turns positive. We're still holding oil. Those of you who are still holding with me, you know the path. I'm not going to look at oil today, so I just want to quickly remind you of what we're looking for, right? First supply, the last time I checked, was taken out, right? So that's a good thing. Those of you who are scared and use 2 entries, it might be a good time for you to break even or to take profit on one of them. I think, and I've been clear on that several times. Right, so now what we want to see in oil, right, is for price to stop hovering at this, 112 mark, right, about $112 per barrel. We really want to see oil start to go down. Somewhere in here on the H4 time frame was another potential demand that we spoke about. But as you can see, markets have done quite well. Those of you who bought with me down here, this old supply on the daily was taken out. There are many supplies on H4, but the real problem is the previous psychological mark, right? Remember, oil was always destined to get to $100 per barrel. When the war started, we thought the highest it could go was like 120, right? And market surprised us and went up to the 130 region. So this is really, a good place to get out of these longs, for the most part. I don't see a big threat right now, right? Granted, with the peace deal, right, going on, there will be no need for oil to skyrocket, right? If the peace still goes well, which we want it to go well, there'll be absolutely no need for oil to skyrocket. So when peace still goes well, and you see that, it might be a good time to consider at least locking profits or just taking profits completely off the table up until a point where you are absolutely clear, right? But until, up until now, markets have really given us a good run for our money. And it's just based on who wants to take profit where. Time to also adjust stop losses and break even, etc., etc. That way, you're making, a lot of money for nothing, right? Protect capital, protect capital, protect capital, right? But this trade has done well. We shall see. I'm just going to remove this. We shall see how far it goes. But, my overall target for these swings is 120, as discussed in previous trader war rooms. Okay, so I think those are the main announcements I have to make. Now, I just want to touch for 5 minutes, like I said, something that I saw yesterday on social media, which I think absolutely needs to be addressed. And it's this idea of smart money concepts, right? Which is kind of like what we do. It's exactly what we do. We're supply and demand traders. We, smart money, we want to trade like institutions, we want to trade like the banks. And it's never a good idea to take, stuff you see on Facebook to hold value. Most human beings on social media generally portray their ignorance or their knowledge in stupid ways sometimes, right? But just in case someone is wondering what the hell is going on, so the post says something like SMC blows accounts, something along those lines. So basically smart money concepts don't work. All right, and it's this is a terrible misconception. So let me put it this way. There is no trading strategy in the world that's 100%, right? There's none. And that's fundamentally because of the dynamics in trading, sentiment, human beings, retail trader, smart money trader, goals, time frames, intraday swing. There's a whole lot of dynamics, so you can never get it 100% of the time. All right, that's point number one. Point number two, there is absolutely 100% absolutely a hierarchy in trading strategies. There is a hierarchy in trading strategies. Most retail trading strategies are here, right? So you already know that there isn't a 100% golden magic trading strategy, but you also should know that there is a hierarchy. For example, support and resistance, indicator trading, is literally the pits. It's at the bottom of the hierarchy of trading. Does this mean you cannot make money? Absolutely not. You can, right? But it does affect your win to loss ratio. I'm not talking about risk to reward. I'm talking about win to loss, which means with a terrible strategy or a low on the spectrum end strategy, You get to make slightly less and get to lose slightly more based on the strategy you use. Somewhere up here are fundamental traders. Fundamental traders are slightly higher than basic retail trading strategies because, at least from a fundamental perspective, you're constantly investigating the intrinsic value of an asset. You look at Bitcoin and you say, look, man, the intrinsic value of this software is it's definitely at 100,000 US dollars at least today. That's the intrinsic value. That's what it needs to be worth. So when I look at Bitcoin at 48, my trading strategy from a fundamental perspective tells me to buy and hold to meet the intrinsic value. You do the same thing with currencies. You look at ECB reports, you look at monetary policy with currencies, and you go, look, man, looking at where the banks are going in that direction, our fundamental analysis tells us that in a year from now, euro will be strong. Looking at where euro is and where euro will be, this is how we want to make our trades. That's a fundamental approach. You do the same thing with stocks. I look at earnings reports, I look at the executives, I look at their liabilities, I look at their assets, I look at their creditors, I look at how much they own, I look at cash flow. When I do all of that assessment from a fundamental perspective, I say this stock is undervalued or overpriced, and then I react based on my assessment. There is nothing wrong with a trading strategy, but they absolutely offer different perspectives of win rate ratio. This is outside the fact that you as a human being are going to stuff up. This percentage down here, 30%, has nothing to do with your emotional intelligence as a trader, has nothing to do with your trading psychology, good, medium, bad. Untrained trading psychology is what a lot of people have, especially in my academy, because I have not yet, worked on that, the way I've been trying to build these basics in first. Right. So every single trader is going to approach the market with a certain type of trading psychology. On top of that, they're going to be armed with a very specific strategy, depending on where they pick up the strategy. And you know me, I'm going to put SMC up here, smart money concepts all the way at the top. That's my bias. That's just my perspective. It's going to take a lot of people, including Moses from the Bible, to make you change my mind about smart money concepts. But the trader, their psychology, their strategy, and the type of trader they become. These are three important factors to your trading success. What's a type of trader? I'm talking about a swing trader. I'm talking about an intraday trader. I'm talking about positional traders. You don't get a lot of them in the retail sector, right? And obviously your scalpers, right? Our schizo brothers and sisters, right? So trading psychology will put a P plus strategy plus the type of trader will always influence your win rate ratio. There are many people in the world who trade for a living using retail trading strategies. I want you to hear me. They make money through support and the same support and resistance I'm always telling you guys to try and avoid. There are many people with indicators and indicators. When you look at their charts, it looks like a 2-year-old was drawing on them, who use indicators and make some type of money and live off that. So they've nailed their strategy, and wherever they are in terms of their psychology and the type of trader, they found a neat win rate ratio. Forex trading, crypto trading, stock trading isn't about how many trades you always get right, but most importantly, on a scale of averages, after 20, 30, 40, 50 trades, if your risk is properly tuned, where you're always risking $1 of your capital but making more. At 365, we like 1:3. Some people like 1:2. Some people like 1:5. As long as when you make money, you make more than you're risking, and when you lose money, you're losing very little compared to what you've gained, you will always average out profitably, right? I want us to avoid this thing where we go around lying to ourselves, thinking that a strategy is the problem. There is not a single problem, right? I will never use retail trading strategies because I've backtested most of them, 237 of them to be very precise, between the years of 2015, when I myself was a terrible retail trader, all the way to 2019, and already started learning better things by 2016. Then I have retested all this stuff, and to me, a 30% win rate from a retail trading strategy plus my poor psychology at that particular time plus my workload as a university student, which meant the type of trader could not have been the trader focused on the charts all the time, meant I would always lose more money. So I moved away from that. Fundamental trading for me works great, but I've found a nice way to make a hybrid out of it, especially for the stock market and the crypto market. I combine fundamentals, the intrinsic value of assets, plus my order blocks, my supply and demand. I am not saying this to try and convince those of you who are not part of the academy to use, smart money concepts. I'm simply trying to say, don't make yourself feel better for blowing accounts, right? Just blindly throwing dirt at strategies. Strategies half the time are not the problem. The real problem in trading is D for discipline, C for consistency, and Y for you. That's the truth of the matter. This will never change. Because of that, it is why in Forex, crypto, stocks, it is easy for all of us to lose money. As long as we break out of discipline and stop following our own rules, we are screwed. Doesn't matter how glittery the situation is. If you don't follow your rules, you are absolutely screwed. If you're not consistent in applying your money to the markets, you are screwed. What do I mean by that? Because you have rules that identify, and I'm talking for us, SMC guys, supply and demand traders, smart money concept traders. You have rules that identify valid supplies, valid demands across the board, intraday, swing trading, positional, your governor, all the stuff I teach in module 1 and 2. You now know this. These are the rules. If you do not consistently apply your money to them, if your trading is like this, you miss 2 weeks of trading and now you're back, and then you're going to disappear again and now you're back. What happens is you are messing up the law of averages. You don't know how many of your trades are going to be profitable and when they are. All I can tell you is, as long as you're trading consistent clusters, right, you always average out. You make more money. Your equity graph goes up and up. But if you're in and out, or if you're confused, and by confused, I want to be very clear here. If you've got one trading account, just the one, and sometimes on that account you swing, and other times on that same account you intraday trade, I promise you're going to get mixed results. It's a guarantee. You're going to get absolutely mixed results because some swing calls require you not to take intraday calls. 9 out of 10 times when intradays are buying, swing traders are waiting for intradays to arrive at a supply to do the opposite. So your mind has to be well versed around that, right? I know this is not what people want to hear today. I understand why you're here. I'll get to the signals, but just let me just quickly put this out there. It's absolutely important you keep track of who you are, what you want to be. There's nothing wrong with having a swing account and an intraday. I find it very confusing to have it on both accounts unless you're really good, unless you're extremely sharp and you've got a fantastic trading journal where you keep track of all your trade ideas, right? Outside of this, guys, please, let's not blame strategies, right? Strategies are not the problem. Your psychology is a big deal to why you blow your account. You blow your account because of your trading psychology. You also blow your account due to your understanding or lack of understanding of the rules, because the rules are a direct application of your strategy. Whether it's a retail trader strategy or smart money concepts, it does not matter. How you understand the rules and apply them, and the trades that you execute, all come from your psychology. If you're not confident, you need to work on that. How do you work on confidence in trading? Back test. Find a strategy, find the rules, master the rules, back test the living daylights out of those charts. Be sure that your strategy worked in 1980, and then in 1990, and in the early 2000s, World Cup 2010, in 2020 during COVID, your strategy kept working. If your strategy gives you a 70% win rate across the board when you back test, you should be confident enough to see that for yourself and know, I took a trade today, I lost. That's okay. I'll take another trade tomorrow. If I lose, that's okay. If I just need to average out, because 70% of my clusters will work out profitably. That's the game. That's all it is. It's a simple process of reminding yourselves that the markets are not for you. They're not designed for you. It's not something that someone created so you could make money. They're actually presupposedly designed for banks. You are now involved because in 1980 it became much more clear and much more lucrative to involve retail traders so as to squeeze liquidity out of them and make it legal. That's why you are involved. You need a strategy that outthinks that process, that allows you to read what the big guys are doing so you can do it with them. Hence, smart money concepts, right? But whatever you decide to do, if you are bad at it, it is a terrible idea to blame the thing when you are the one who is bad at it, right? And I'm not talking to anyone in particular directly. I didn't even know who wrote that post, but it's just like, geez, man, you know, at some point in time, rule number one in life for personal development is take full responsibility over your life. If you're watching my live videos on swing trading and you go to my intraday sessions during the week, you have to ask yourself, why is he selling a course? What's in the course that's not in all these free things, right? If you think you can just mimic and copy what I'm doing without fundamentally understanding the rules of trading, it's fine. You can try that. But on judgment day, between you and your account, take full responsibility, right? If you want shortcuts, you get shortcut results. Whew, right. Thank you guys for just giving me that space to say all of that. I say this because, you know, markets are changing. You know, tomorrow at 6 p.m., I will not be postponing. Tomorrow at 6 p.m. on the channel, we're going to have a traders movie night. And we're going to listen to what Ray Dalio has to say. And I'm going to tell you exactly how I'm preparing for the lost decade. Markets are absolutely changing, right? Some of these trading strategies that are flavor of the week are going to fall apart so quick. Right, and some trading strategies are not going to change because fundamentally, if they match how smart money moves and smart money doesn't change its plan, then you are golden. You have to infuse yourself into this world. This is not a lotto where you just buy a ticket and then hope for the best. Right, so today, guys, you know, like I said, I want to kind of like quickly talk to you about a couple of things. Maybe let's look at some COT data stuff that I've compiled. I haven't finished, unfortunately, but I want to talk to you about a couple of things, right? So, you know, I marked this zone here blue. This is now in our Masters Trader spreadsheet, right? So I'm going to be looking at about, you know, from March. You know, I think I last updated this thing on the 1st of March. So I've updated it up to until last week Tuesday's COT data, you know, just to get like our heads on the swivel, right? And then there are a few things that are particularly interesting. And I'm just going to be using AUD, you know, CAD. I just want to see, yeah, that's up to date. Swiss franc, up to date as well, and Euro also up to date. Good. I'm going to be using these four main assets as I talk to the COT data, just for you to get a sense. I want you to remember a couple of things. On the 24th of February, a war started. I want you to remember that throughout the beginning of the whole year, and including last year with inflation fears, these things were dominating our risky assets, our equities markets, stock markets, but also crypto markets, and including Forex risk-sensitive assets, your Euro, AUD, NZD. When the war happened, right, markets went crazy, right? It's been a long time since we had an actual market crash. How do we know where the market crashed? All equities fell below 20% from previous all-time highs, which signals a market crash. No longer a retracement, it's a real market crash, right? So we had a build-up of positions. And this is important for smart money concept traders, right? Because banks can't change their minds overnight. If I see a support, I really want you to understand. I mean, I don't want to bash trading strategies today, man. You know, me and my partner the other day, we went out, we were on a date, and we're just talking about. Apparently, I look stressed. I don't think I look stressed, but anyway, apparently I look stressed. I'm just overwhelmed, really. And she was asking me, you know, what it is that I want to do, and what I really want to do is like, if you guys watch the movie The Matrix, you sit someone down on a bloody chair and you just connect them into the Matrix and they can download stuff. I wish I could do that for traders. I wish I could connect you guys so you can download everything that you need to know, so we don't have to play this tug of war. But retail traders, if this is a support, market's supposed to go up. But if markets decide to go down, then all of a sudden the support is broken. Markets have to retest the support to confirm to you that it's definitely now a resistance, and then markets go down. And in many ways, these zones for you, for retail traders and for many traders across the board, are what we call flip zones. Flip zones are actually very important for smart money concepts, because we also know that wherever there's a flip zone, there is always a potential rate for liquidity. Why? Well, for all buyers here, their stop losses are there, and for all sellers here, their stop losses are there. So the entire flip zone is such a beautiful place for smart money to hunt, right? So if you've been following my channel long enough, then this stuff right? But what I want to really emphasize is the difference between how smart money thinks and retail trader money. Smart money can't change its mind like this. It can't be, oh yeah, so we're going up, or no, now we're going down, right? Let's go back down. Because smart money can't fill orders as quickly as retail traders do. Retail traders get filled by their broker, at the mercy of wherever they want to trade. And most retail traders, by the way, I've been teaching for about 2 years now, 2.5 years, give or take. And I know for a fact that a lot of our traders always struggle moving out of ME, market execution. Retail traders love market execution. They love market execution for 2 reasons. Number one, trading signals, which have plagued the Forex market education industry, right? Free signals, paid for signals, all those things force everyone to go market execution. Number two, retail traders don't understand or really fully grasp the power behind pending orders. And they don't do that because retail traders believe markets are random, right? This is a whole other topic to cover, or you'll see it for yourselves, inside the course, right? So markets are not random for some of us, and we understand why. Now, smart money can't do this. Smart money has to operate in a legal but consistent manner. And that is to say this in front of you, COT data. And the reason for that is, if smart money was buying yesterday, and I mean seriously buying, right? And then tomorrow they decide they want to seriously sell, they would crush the market. Not only that, but the people executing those trade orders, who are not companies per se, but what we call order flows, so your New York Stock Exchange, your trading pits, they would not be able to just sell on a whim. For me to sell as a professional trader on a trading floor on behalf of an institution, a bank, or a company, I want to repeat this, I must have a client on the other side. Understanding this will change the way you see trading. I cannot sell unless I am sure someone will buy. I am not trying to make money by selling and flushing the market, because if that's the case, if Standard Bank gave me a call and I was running their books and I was their trader, and Standard gave me $15 billion to trade, then it's easy. All I have to do is call FNB, call Capitec, call Absa Bank. These are all South African banks, and say, guys, on Wednesday, I'm going to flood the market. So I need you, FNB, to put 10 billion bucks on the table, put 15, and we collude, right? It's technically illegal, but technically speaking, we can all do this as smart money. We can all just say, on 14th of March, we are all selling. On the 14th of March this year, smart money bought across all equities. All equities, no announcement except for mine on the 14th of Feb, but no announcement that the crash is over. They just bought right across in the middle of a war, in the middle of people dying. The same thing that crashed the market, which was a war, was still happening when smart money bought. And I want you to understand this. It's because at some point in time, every single week that goes by, during your trading journey, during your stop loss hits and your take profits, smart money is moving structure to a point where they can find customers. When they find customers, orders will have been stacked left, right, and center. And to change the direction of those orders takes time. When markets take time in changing the direction of the orders, we get a sequence that looks like this, right? The sequence that we find in COT, right? So here we know I'm going to talk to AUD, CAD, Swiss franc, euro for 15 minutes, and then we're going to look at some signals, right? What I'm doing today is more important than telling you where markets are going to be a week from now. I mean, I like what we do week to week, but I really want you to understand, right? Maybe I was triggered more than I thought yesterday, but it's crucial that you get this, right? So AUD, if you really look back in time, you know, throughout AUD, there's AUD here on the 1st of March, AUD in February, right? AUD again, 89% shorts, right? AUD has had a lot of sell orders stacked up against them. Now, I designed, you know, the COT data, our spreadsheet. I don't know who's teaching COT out there. I don't know if there are people still teach it. I don't know, whatever. But the spreadsheet is not pulled just from the internet. It's got things that I've added, right, to help our trading strategy. And I told you guys that I'm adding a column here with my formulas called the sentiment indicator. The sentiment indicator basically covers and looks at the total order flows between non-commercial positions, which are hedge funds, banks, institutions, and commercial positions, corporations hedging. As a corporation, if I have an actual product, if I actually produce oil, if I actually am a farmer and I produce wheat, or I represent farmers across the board, if I'm a company and I reproduce companies that are mining gold. So if I have an invested interest in an actual product, it is my job to use money to protect the price fluctuation of that product. Hence, we call it hedging. These guys and these guys don't always do the same thing. As traders, we want to think like these guys, but you know, just looking at the COT is not enough. You'll see me break it down in module 3. It's a very complex thing. You know, a lot of people I know, they download the stuff now and they just look and then they just buy because there's more sell orders. It's a beautiful dance that you have to master. And one of the basic things that I'm happy to share, as usual on YouTube, is our sentiment difference. As long as the sentiment indicator shows, and the sentiment indicator is a combination of the net positions by the banks and the net positions by the commercials. Green for me is always positive. Red is negative, so it's a negative balance, which means there's more sell side pressure. Positive means there's more buy side pressure. As long as the sentiment indicator is not yet fully met, right, in the criteria, in line with the banks, and I'll show you what I mean by that. So let's quickly get to where we are in March. I'll show you what I mean by that. You want to see confluence, right? So you see here for AUD, folks, we've got 87% sell orders on the banking side to sell AUD, right? But we've got the opposite, of course, when it comes to hedging. So they're actually more long on AUD. Now, the combination of net positions between the banks and other private institution hedging companies yields us to positive orders on the markets. So even though, I mean, I literally got stopped out of AUD USD. I mean, I don't think it was a big loss or, you know, consequential loss. I did say most of our pending orders are now expired or about to expire. To look at those swings, right? And I will get to that at some point. But just so you know, because you can set a pending order today, which is going to get triggered 3 weeks from now. And this is the kind of stuff you kind of like have to be slightly mindful of, that even though the order flows are being piled up to the sell side, right, as long as the net orders, the execution orders on the 1st of March are positive, you will see, let's go to AUD on the 1st of March. Let's go to AUD. USD for as an example, but we'll look at the currency index. I really want to get through to you today, even if it means you know people leave the live because they're over it, right? So 1st of March, let's find it. That's the 8th of March. There's 1 March there. 365 traders. It should not be shocking, right? But if you're not a 365 trader, on the 1st of March, we're at the beginning of an order block, right? So once again, you see this yellow zone is still untouched. It's still my old a place where I wanted to sell. And guys, when we put this thing here, I think we're still falling all the way there. And so we're going to wait for a retest one day all the way up there. You know, a supply that we drew late into the future. As markets were moving towards that, I would not have freaked out, because the only way I can sell up here, by the way, is for markets to come up anyways. Here are the things that I want you to start watching out for when we plot our futuristic swing trade ideas. Watch for the nature of structure. Structure is talking to you, because what they do in their COT, what they do on Tuesday, they have to submit this information legally on Tuesday. It's only released to retail traders, by the way, on the Friday, giving smart money at least 3-4 days to move before you move. Right, for those of us who know how to read this. All right, so and then there's a group of traders who don't even know about smart money concepts, right, but will talk trash about it, right? But so just be mindful of that kind of stuff. There's the 1st of March. We've got 87% of sell orders. That it's what has been compiled. It's what needs to be processed, right? It's what a floor trader needs to get to do at some point in time. But the execution of money, please take time, right? To gel with your sentiment indicator shows you that there is still more buy orders on the table. Now let's compare it from last week, because you guys keep adding sell orders. Last week, the week before the 1st is what I mean, on the 22nd of February, there were 11,000 buy orders. The additional sell orders the following week reduced the buy orders, but did not annihilate the buy orders. Is supply and demand true and real? Absolutely. When markets got into the supply, right, price went down. The reason why I got stopped out was because I was stubborn. I just stayed. That's the problem with me. I love swinging. I'm just too patient sometimes, right? Because the truth of the matter is, as soon as markets made contact with this demand here, that's just the truth. As soon as markets made contact with the demand, I should have been out. If markets failed to break the demand, right, I should have been out. But markets didn't do that. Markets did this, went up, created a bearish engulfing pattern, which secured me as a trader. As soon as I saw this, I thought, why? Because, well, there we go. We've got a bearish engulfing pattern right there. Surely markets are going to bounce and go and drop back down. And that was me looking at this thing from a structural perspective. Granted, the smarter thing to do, as soon as this bearish engulfing candle had been showed up, I should have just broken even. We all should have just broken even in retrospect, like in hindsight, but that doesn't matter now. Let's quickly follow COT. Like I said, I want to do this for 15 minutes with you, then we'll look at chart. The following week, on the 8th of March, once again, there's a war going on. I want this to sink into your head. Bankers, Wall Street are not in Ukraine carrying guns and bombs. They are going on their everyday business of making money. When I finally teach you guys trading, the module 4 trading psychology, I want to do it chart free. I want to do it as much with chart free, because until you guys understand conviction in the market, I suspect your psychology is going to suffer. The only person who can do this, who can charge like this, there are actually two people. Number one, retail traders, when they're being stupid, right? That's why we call ourselves dumb money. Retail traders, we are dumb money, myself included. We do dumb things with our money. Charging blindly into a supply is dumb money. But the other person who does this and does it very well is smart money, conviction. But when they do this, they're outbidding the other side, right? I don't want to get deep into this stuff today, right? When I'm outbidding you, I'm saying if there are sellers in this market, in the AUD market, I'm sure they are. I want them to capitulate. I've taught on capitulation. I want them to give up on their sell positions. So look at this. There were sellers here. They got done. There was me trying to sell here. I got done, right? But I was just simply missing the signs and not even focused on this chart. But it's actually a beautiful thing to look at 2 weeks later to go, what on earth was going on? And if you follow the stuff, if you're not too comfortable as a trader, especially 365 students, I pray that comfortability becomes your enemy. I pray that it's not everything has to wait for Leroy, because I do this because I love it, but my plate is full sometimes. So you should by now know where to get COT data. You should by now have a basic understanding of what we do with it, because if you just track this by yourselves, one of you, at least one, in the Senior Traders Academy, traders group, a lot of people spoke about it. But no one in the education group sent a WhatsApp to say, look, man, or in the private Telegram group, look, COT is still as positive positions, 15 March. There's no ways it's going to break, because floor traders, your sentiment indicator is what your floor traders are most likely executing on the time. But interesting enough, on the 15th of March, when did I say the recovery is going to be? On the 14th of March. So a day after the predicted recovery, look at AUD pressure. All of a sudden, sellers are losing ground. It's still massive sell positions on the table compared to longs. You've got 24,281 long orders, but 69,000 shorts. So shorts are still dominating, but there's a cool down. There's a cool down here, and that's because all risk assets were booming in their recovery, right? And still, money on the table that was being filled. Remember, according to our module 1, guys, we only make money looking at unfilled orders, right? So I've got an arrow here for you. 15th of March. That's the 15th of March there. Where my red arrow is, that's the 15th of March. You guys will just let me know if this is getting too boring. You just want me to stop. You know, to just get to the point and give you guys signals. You just comment and I'll stop. I mean, I don't wanna, I really don't wanna bore you to death. I just find it's important. I just find this so important to get right. Now you've got a classic pattern here. You can combine some retail trader knowledge. You've got a double bottom, but really, you know, it's more than just a double bottom, right? It's a liquidity rate, right? When you get markets closing at the same place but a wick going down, they are sweeping. They don't want to go up with you. They want to go up without you, which means as a supply and demand trader, not that you have bought here because there will be no confluence at all. Number one. Number two, as a supply and demand trader, I'd be shocked if you tried to buy here because the imbalance rule was not met. And this is what I mean. You see, we didn't get an imbalance. So naturally, your stop loss would have been hit. You'll see someone see me drawing rectangles and now they think they've figured out the strategy, not knowing that there are multiple rules that make up the parts, right? So this was a clean double bottom, dead bottom. That's what it's called, where you look for quick liquidity, where markets want to move by themselves, right? So banks love to move by themselves. As a, you know, as a smart money concept trader, right, at least if you've been taught by me, your only first buy, your first attempt to buy would have been here. The only first time is when this red candle came to try and retest your first order block, your first signal to buy. That's when that would have happened. Nothing more, nothing less, nothing here. There is no level to buy here. Don't combine strategies if you're in the academy. You know, and that's my advice, because it's a sign of two things. Number one, you actually haven't mastered supply and demand. If you see yourself combining stuff, you have not yet mastered supply and demand. That's problem number one. So what you're now doing is you're taking a half-baked recipe with another thing that you also haven't properly mastered. How do I know none of these things are properly mastered? Because you're rushing. You are rushing. You're trying to make money. So you think it's a waste of time. Psychologically, that's what it means to me. It's a waste of time to learn. I'm just going to go keep wasting money, keep losing money, rather than just taking the time to learn. Most of my best traders learned for a year, 18 months, just kept hammering the basics because time moves. Anyways, this is the 15th of March. Thanks, Alan. I see you. All right, cool. So you guys are fine with this. I promise I will do some signals. We've got another hour left. I will do some signals. But this stuff is to help you. For example, guys, because module 3 is dropping very soon, I'm very much under pressure. I've got people waiting for wealth in 3 years notes, you know, which I think is done, but Canada did something on Friday. I need to understand that. For example, I mean, I'll tell you this right now. If you Google it right now, CAD government, if I want to send you crypto, right? If I want to send you $1,000 US worth of crypto in Canada, Leroy has to tell the Canadian government, listen to how crazy this is. This came out on Friday. So I'm not holding back your wealth in 3 years. I want to make sure everything we do hits, because legislation is the big theme for crypto this year. And every legislative bill that comes out, I read. I sit down, I read. Right? I've done the Bitcoin video twice now. The first time, then I had to edit something, and then now I'm just holding it so I can just redo it again with all this new information. But if I send you over $1,000 US in CAD, in CAD, and in Canada via crypto, I need to fill in a form to tell the government who I sent the money to. I want you to understand, this is literally the entire reason why crypto exists. It's supposed to protect you in that sense. It's supposed to be anti-governmental, invasive in that particular sense. CAD government's new executive order puts the onus on crypto, not on the company like Coinbase or whatever it is you're trading on, but actually on the sender. Before your money, before your thing is sent, you, the sender, must give the government information about the receiver. That's absolutely insane, right? So when that dropped on Friday, I was like, oh my gosh, there's a whole lot of more stuff we need to understand. So it's coming through. But anyway, back to this kind of stuff. So I'm bringing that up because this week there will be no London session, by the way, in the mornings, Monday till Friday, because there's about 7 videos that I need to add to module 3, and I need to use that time to finalize and wrap up the course for you. So once again, this week there will be no London morning sessions. I will do a special NFP video session during the week, but I really need to just focus and just wrap up the course for everyone. So I hope that's understandable. So in times like that, this stuff you have to master when you're by yourself trading, in case I can't be there during the week. Now watch this. On the 15th of March, buy orders. I've shown it to you on the charts there. 15th of March, as long as the people whose job, when I was a flow trader for Alan Gray, my job was not to be right. No one cares about how right I am. My job and what I get paid for, I get paid by the dollar. Back then it was in rands, right? A specific percentage of all the orders I fill. I get paid for all the orders I fill. You are looking at filled orders. Candlesticks represent filled orders. Someone has done their job to print the flow of money. You don't make money from filled orders as a smart money concept trader. You make money by identifying unfilled orders, a place where someone like Leroy back then as a flow trader must come back and fill orders so that he can get paid. I have to get paid by filling orders. You have to get paid by making the right decision to get filled when I get filled as a retail trader. Right, so AUD is constantly, and then we get this. So only this Tuesday, 22 March, we finally get the first sentiment indicator of red, right? The first time where all of a sudden the overwhelming sell orders are slowly but surely starting to catch up. But now let's look at the structure. Right, let's look at the structure, right? Because sometimes I teach one thing and people think it's now the golden rail and they forget about confluence. So all we are going to do is we're going to understand what happened on the 22nd of March and with this past week basically with AUD USD. Somewhere in here is the 22nd. There we go. So all of a sudden, markets returned back to a supply. This was the first time markets came to this supply, right, on the 3rd, 4th of March. Okay, let's see if there was any activity around about the 3rd, 4th of March. I think the next one was on the 1st of March, right? So we're still fully buying. And then on the 8th of March, we had negative 12 sell orders, right? So apart from that, big buy and then negative 12. Now, understand the logic, guys, because you miss it. Look, you've had buy orders since January on AUD. I'm still stuck on AUD. Buy orders, 16,000 buy orders on the table, 12,000 buy orders on the 8th, 10,000 on the 15th, 11,000, and then in March, 9,000, and then on the 8th of March, you have negative 12. Now, picture it this way. Flow traders, we have something called an order book. Brokers have their own order book. Flow traders have their own order book. I've taught on order books for brokers inside the course. You'll have to have a look at that stuff another time. But I have my own order book as a trader. At least mine was digital. But back in the day, they had this stuff. If I wake up and on my order book, mine personally, Leroy as a flow trader, my orders of the day, of the week for our client have tallied up to more buying or more selling. So let's call these buys. The buys are this big, and then the sell orders are this small. So there's more buying on the table. And somehow, at the end of the day, I have negative 12 orders, sell orders, just a small number of sell orders on the table to make on the 8th of March. It means, and I execute them. I want you to understand what's going to happen the following week. If the following week, you see, guys, so on the 1st of March, there were 9,000 buy orders. On the 8th of March, there were, let's say, 12 sell orders. Do you see the difference? Massive difference between 9,000 and negative 12. The following week, there are 3,000 buy orders, almost 4,000 from negative 12. Negative 12 would look like this. Or just 12 sell orders. It is a tiny, tiny, tiny amount of selling leaving a supply. Just tiny, between there and there. And all of a sudden, the following week, you get a massive 3,000 buy orders. What's more, obviously, there are more buy orders than sell orders between the week, the week before. So let's just quickly go to those two places on the chart so we don't so I don't confuse you. All right, so let's first figure out the 8th of March. 8th of March, 8th of March, 8th of March is somewhere here. That's 8th of March. You see this? The last red candle in this pattern. So price was going down here, bearish engulfing. This was the 8th of March. Just push price down. But watch. Do you get the logic though? Do you understand? Because look, markets have created a bottom at the bottom, finally created a real daily demand here, and the structure is moving up. Now, when the structure was moving up, what happened? Markets created a demand, an unfilled order. An unfilled order. Remember, you only make money as a retail trader if you can identify unfilled orders. This is it. Now, there's an unfilled order, but what kind? It's buy orders. Then markets rallies into a supply. Now, the flow traders, whoever they are, know this. Markets have two choices. If they want to drop, we can look at the governor. We can reassess the whole chart from the big picture. But I want you to see day to day what's going on. On the 8th of March, we are told, it's not me, it's not a video game. We are told that, look, at the end of the day, the sentiment indicated there were only 12 orders, 12 biggish orders to push price down, and it's this one red candle. What are we doing? We are pushing ourselves back into a demand. Why? Because we've got unfilled orders there that we need to deal with. Market inefficiencies. There is nothing that is left undealt with markets. Order blocks must get mitigated. Gaps need to get filled. It's just the rule. So just because there are buy orders here, before we can all of a sudden go kumbaya, we've got two options. Break the demand, but when you're going to break the demand, you can't break a demand with just 12 sell orders. Hell no. So markets arrive into the demand. Markets push up, 1-2 days back into this new supply here. Oh my goodness gracious, guys, I pray you're with me, right? So now look, now there is a new supply somewhere in there. You guys see it, right? There. A reaction to the previous supply, bearish engulfing pattern, bullish engulfing pattern activated. Markets rally back into same, just like our rules, right? Literally just like our rules. The exact same thing that we always talk about, where markets are head into a supply, bearish engulfing, and fall down, right? So markets fall again. Let's go to COT. So on the next time we get data is on the 15th of March. So we know that markets use the 12 orders to drop into a demand, just to go back and retest a supply and then continue to fall. This fall happens up until the 15th of March, which is right there. I'm going to go Akinihashi just for the kicks of it, right? We can see that there was a strong buying momentum here reacting to there that left a good imbalance. It is safe to say, if you're paying attention, markets had some type of a demand there. This is non-negotiable. You can see it for yourself. When markets go, I'm not drawing it properly, right? But obviously it would look something like this. Right, but when markets finally got to this demand on the 15th of March, a demand that is structurally intact with an uptrend, right? Markets then went up. This is the 15th of March. Well, let's see. Previously, they only had 12 orders to maintain some sell pressure, which was just one candlestick into demand. Now they are back to pumping buy orders. All of a sudden, they cool off their sales, 74% shorts from 83, a 10% reduction in shorts, and a massive increase in the executed buy orders. And on the 15th of March, this thing does nothing less short of just rallying, and it rallies and rallies and rallies, right? And then markets do what? They break this new supply and they deal with this second supply, and they land in the original supply, which is the third supply. Inside all these supplies, markets should do two things. You drop if you're dropping because it's a supply, but if the orders are done, if the sell orders have been drained and you can see they've been trying to pull from the zone, you have to supplement that area of value. You absolutely do. So let's see what COT does the following week, right? The following week, which is this red candle here. This is the 21st of March, and the big bullish engulfing candles on the 22nd of March. When do we get COT reports? There we go. On the 22nd of March, we get a negative number. Let's call it almost 3,000, right? Less than this, but quite high there. Let's see what the banks are doing. The banks haven't moved from their reduction. I mean, so 74% the week before, it's now 75%. There hasn't been a serious change of plan. Hedge funds, 72 long, 73, 26 shorts, 27. No one has moved. Please see this. I mean, it's called comprehensive understanding of a report, right? But I want you to see, just because your percentages are going up or down, see if money has actually moved. The banks haven't changed. I mean, you're looking at a change of about 1% between the 2 weeks. Nothing has happened here. So how do we account for this negative 2008-01 sell orders? Let's look at the structure. So on the 22nd, which is not the red candle, but actually the big green candle. So on the 22nd of March, we are told that floor traders actually sold. Floor traders sold a little bit, about minus 2,801, right? We know for a fact in hindsight now we can sound smart and say, yeah, but there was always an uptrend. But when you are trading on that day, you might not clearly see this, right? Because if I go to the H4 time frame, which will be slightly better now that we want to get a little bit deep, right? So this is what it looks like. The day before the 22nd is all of this stuff here. No, I lie. 20, day 21. Also, this is about 21 March. So from this red candle, right, all the way into this area here, the 22nd. At 3 a.m. Asian time, right, the Asian market, the markets are known for market accumulation. The Asian market, the Asian time zone is an accumulative process where markets accumulate more than they trade, right? Markets arrive at a demand. That's how that day starts on the 22nd, right? Throughout the day on the 22nd, I just want to see where that ends. Up until this last red candle here, markets are doing nothing short of buying. They're just buying and buying and buying. So what happened to the negative, was it 2,800 sell orders? Well, naturally, if I want to sell, I need someone to buy. And if I want to buy, I want someone to sell. That's where markets start to create markets, right? Markets always create markets. Market makers create markets. And what that simply means is there's always going to be a customer required. You see this white line that I drew it a long time ago, which was basically marking this bearish engulfing pattern. This white line, if reduced a little bit, just drawn a little bit significantly, signifies a lot of things. In fact, if you run it across the chart, something like that, and really you could go as far as you want with that, but I already have enough data in front of me, right? As markets were intersecting here, right, on the 22nd, this big green candle, please, if you're lost, if you don't know what I'm pointing at, you just need to talk to me, right? But as markets, this big green candle, our bullish engulfing pattern is the 22nd, right? You will notice retail trader strategies at bay. You will notice that this once upon a time was a broken support. How do I know this? Well, markets came back and it turned into resistance. Markets went, right? So there was a quick liquidity sweep there. Markets went up, then it broke up, and then markets came back down. And then there we go on this rate there. Markets react to it again. So every single Jack and Jill on the field believes there's a resistance point there. A little bit of selling was done by floor traders to create that momentum. Just a little bit, just enough to get everyone here confirming the same thing that they're seeing, that this is a strong resistance point. It's time to sell. It worked well here. It worked well there. It definitely held price there for the third time. And then for the fourth time, it worked there again. And so smart money contributes, creating the market, sell orders, only to maintain structure, to buy against the grain. But here's the sad part about this reality. The day before that is the only time they actually printed a red candle. The day before that. And if you really know your retail trading patterns, if you really know that at the end of a bullish trend, right before a resistance point, if you get an indecision candle, it signals market reversal. Retail traders were told to start selling on the 21st. If you know your retail, if someone who's watching this stuff, who is well endowed with the candlestick Bible, all that retail trading strategy stuff, you will know that just before a resistance, an identified resistance, after a peak of buying, it signals a market reversal. So markets allowed for that to be printed on the day before, and the next day bought against everyone. Right. So your structure is absolutely important. I mean, I've spent so much time on this. I hope this helps. I mean, I don't want to, if you look at AUD individually, right, there you go. If you look at AUD individually, so it's the same stuff that I put on your COT data spreadsheet, then I break it down, as you guys would know, I break it down per asset for you. This is strictly AUD. This thing has just been buying. Right. Yes, smart money wants to sell. They're compiling sell orders, but we know they're going to sell high. I marked this blue so you could see for yourselves the cool down effect, the cool off period beginning with the market global recovery on the 14th of March. All of a sudden, their sell orders can't even get to 80%. There's a complete cool down. Right. Same thing with Euro USD. Euro USD has been falling nonstop, but look at the mitigation of levels between longs and shorts. It's been consistently a mind game, right? Markets ranging and breaking to the downside. Nothing crazy. There's no 50%, there's no 60%, there's no 80%. Between 46 and 53, 47 and 52, keep it in the range. But the trend, the sentiment, the stuff I've been saying, just sell, just sell, just sell. That's what markets have done in the long run. My prayer, specifically to 365 students who've done Module 1 and Module 2, is that in the next few days, when you click in your email to log in to do Module 3, you do it from a standing point that you know that you have to start at a place of mastery, that it is worth taking whatever time you need, whatever your problem is in trading, master it. Right. My job this year is to roll out all the tools. So Module 3 and 4, that's all I got. You know, I mean, there's a Module 6, but I don't want to talk about it because then everyone will go crazy. But it's just fundamentals. It's all the NFP stuff. I'm putting it all together for you. It's just going to be a simple thing that you, and again, it's going to be for free, right? But don't worry about Module 6. The tools you need in your lives are going to range from Module 1 to Module 4. Module 3 is going to vex you, ladies and gentlemen. It's not hard. I refuse to believe anything I've put in there is hard. It's just new. But the problem is if the foundation is not layered in, if Module 1 and Module 2 are still giving you problems, I want you to, it's okay to go back, redo Module 1 and Module 2, just to do it one more time in your mind before touching Module 3. I understand the excitement and the anticipation, but we know, right? I mean, we know that long term, right, you are going to trade for a very long time, especially if you become a profitable trader. It's going to start becoming your only form of income, unless you're an entrepreneur and you've got businesses by the side. Good for you. But I'm saying if this is something that you really want to do in the long haul, then you really need to be careful about what you're asking of yourself. You cannot ask yourself to rely on trading to make you financially independent if you're not willing to die for trading. And I use those terms carefully. If it's going to be your only source of income, your stable source of income, you have to give it your time. There is nothing, guys. If I do a live stream of Module 1 for the next 6 weeks and we come to these levels and all we do in our course is to back test the strategy in a much more, well-structured way, there's absolutely nothing here that's happening on this chart that you don't know if you've done Module 1 and 2. The problem is when it's happening, when it's now you trading, when it's your money on the line, that's where the problem is. And that's the kind of stuff that you need to mitigate. What module 3 does is it throws you into the wild. It allows you to see price in its much more detailed view, but it's also pushing you to compete with the best of the best, number one, but also with the ultimate noise. Intraday trading has a lot of noise. It's not to scare you. You can make a lot of money. In fact, you can make more money than a swing trader because you get more opportunities, right, than a swing trader most of the time, right? Because if your scanning game is good and you're consistent in your discipline, you can do it. I mean, I've been doing London sessions. I've done 20 of them, right? And I'm always pleasantly surprised at how well this stuff is playing off. And that's just an introduction to module 3. So please, guys, please, especially to my students, please be mindful of the chapter you're in. You only have this year. You only have this year to properly invest in crypto. You only have this year to master, the basics. We are in the lost decade. Things are going to change. Your FOMC right now is acting calm, cool, and collected. The very idea of geopolitical economics is changing in front of us, right? So what happens is that the flow of money always gets interrupted, flights to safe havens, and new assets are constantly being introduced. Right, almost 12 years ago or 15 years ago to be precise, there wasn't even crypto to be spoken about. It wasn't even there. It wasn't a consideration, right? So now we've got NFTs. I can tell you right now, we are hedging about 1/5 of our trading flow capital into trading art. I mean, I haven't talked about that stuff on my channel. I don't know when I will, but the money and markets evolve as humans evolve. And in an era of massive technology, things change. You have to be willing to change. You change so much better if you're grounded. Get grounded in smart money concepts. If you're already a 365 student, you have no choice. I'm never going to show up and teach you something else. I only teach you what I've tested that works with my live accounts. Nothing more, nothing less. Let's get grounded, colleagues. Right, guys. So now let's quickly on to the business of the day. I want to look at currency indexes for you. We haven't done this in a long time, and I appreciate all of you who allowed me to just be me. You normally get these random monologues from me during class, so I appreciate you guys allowing me. So this is the Australian dollar index currency by itself. It will mirror AUD USD a lot of the times, right? So this is that supply that we're teaching on right now. This is the 15th of March we're referring to, and you can see the currency index measures the strength or weakness of a currency, and even that, folks, we use supply and demand, right? So we're going to go govern now on about 2468, about on 8 currencies as quickly as possible. We just want to see if we're still on track. Because we're approaching a new financial quarter, there is some readiness that you need to do. Right, so AUD USD, right? You know for a fact that this is what AUD looks like. On the left side here, banks have been waiting to sell like crazy. Flow traders, institutions have been buying like crazy, because if you're gonna sell, you want to sell high. If you look at the currency index, well, what can you see? I mean, when I look at it, I see a tail, an interesting tail, right? I see a commodity asset, it's a commodity currency, right? Struggling to hold on to a facade of strength, right? Yes, they had good job numbers quite recently. There are a whole lot of things, but what markets have done is markets have broken the cardinal rule on this day. As much as they've been trying to pump it up, they also removed the floor. Now we know that there is no demand anymore on AUD USD. The problem is, because we know this as supply and demand traders, and this is where your psychology comes into play, we are now trained to assume that every single supply we see is the supply that will drop price, right? So my long-term perspective on this, and it'll be interesting to see this play out in the second to third financial quarter, is a drop. And I'm saying this to say, because remember, a lot of the times these assets, guys, have to follow mother of risk sensitive assets is Euro USD. AUD USD is 1 year behind Mother. Mother broke out of a trend line. Mother created an engulfing pattern right here. Mother retested the engulfing pattern. Mother went back up to the supply. Mother is now at a demand. Euro USD is Mother. It's done this for all these assets. These assets simply just follow behind nice and slowly, right? So we can see that it's completing the path. And just so people don't think I'm making this up, I'm going to go to Euro, EXY. You can see it on EXY. You can also see the exact same thing on Euro USD. I want you to see what I am referring to. So let's real quick draw a trend line. Okay, there you go. Never mind. It's all there. It's all there. It is all there. Right. So this is what this is what AUD has on the chart. AUD has broken out of the downward trend line, right? This trend line here. AUD has created this bullish engulfing pattern, right? Markets went up. AUD has come back to it, right? And now AUD is now moving up to test it. And you can see Euro did the same thing, the same boring thing. Came here, tested, broke, and when it broke, we had a downside rally. Now Euro is way ahead of the pack. Pound, AUD, NZD, the whole thing looks the same. It's a boring script. Trading is exciting for me because I'm passionate about it. But the application of rules after mastery should be boring. Should be like riding a bike. If you've been driving for 2 years, you can drive now with one hand while listening to your favorite rap song because you're no longer scared. You're not holding the steering wheel with 2 hands because you've mastered the craft, right? So it's the same thing here. Application of rules, stand. Now we've got no room to stand on here. Markets have dropped. Markets have not created a new demand to the upside right now, right, on AUD. And so all this buying that we are seeing week after week is really the accumulation of these 2 big green candles, right, over time. That's all. And all markets have done is successfully push price up. A new month is coming, a new monthly candlestick is coming, a new financial quarter is about to start. And we have a lot of interesting places to play. Number one, price could say we are now going to engage here. So the first thing that we want to start to see this week is potentially AUD or AXY, the index, slowly but surely starting to retract from its wick. Right, so it's starting to drop. It's going to use the last 5 days to draw to create a long wick, which would point us now down to the downside. Or markets could use the whole month of April to push up further for an even higher move before dropping. That being the case, my money is towards the same sequence that befell Euro USD. And to me, if you look at Akinahashi, all they're saying is we're at this PCP here, we're at an imbalance, we've got a retest, and I wouldn't be too surprised now if we're to start seeing some price action to the downside for the next 2 to 3 to 4 months. It would not be too surprising based on the fact that AXY is where it is today. If markets take out the supply, that's a different story. Markets have not taken out the supply. Right? This is the supply. Markets have not done that at all. What markets have done is markets have definitely taken out a demand, which to me is telling. So AXY in April, and the rest of the second financial quarter, be mindful of that. The next one is Swiss franc. Swiss franc, and we can quickly come to our COT report just to get a taste of what's going on. I won't do the holistic one because of time. Just see it for yourselves, right? So they've been edging to sell, and they've been struggling with a lot of positive sentiment in the buy orders here, right? Swiss has been, and that's because of the call, the safe haven flows, blah 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 blah, right? It's been happening. But if you look at its index, right, market simply just ranged, man. I've got these 2-3 lines here at 110, 107, 106, and for the most part, especially on the daily time frame, those are the main central focuses of this chart. This chart looks absolutely ugly. I mean, I hate everything, Swiss franc, if you know me well. But now, in relation to where price is and where price needs to be, we've got an interesting dilemma. When markets range, folks, they are accumulating. You just think about it as a very loose version of bankers lobbying. You're looking for buyers or you're looking for sellers, but you're definitely in a range. I understand my brothers and sisters will be tempted to draw channels here on the smaller time frames on the daily. I understand anyone will be telling me about flag patterns to the downside. I see all of that, but I don't want you to miss the bigger point that since last year, September 2021, markets have been ranging. And so to range precisely, you have to keep, a buyer and seller's equilibrium, right? So I don't want to make a call too hastily here, because I actually need direction from smart money. I need to know where we're going. As far as I can tell, something has got to give, and whatever that is, and whenever that is, the direction will lean more to the downside, in my humble opinion, for Swiss franc. Right, the direction will lean more to the downside, which sometimes is a fundamental indicator for the dollar, slightly moving, pushing up, right? Because the Swiss only benefits when the dollar is weak. It's a parasite to the dollar. So watch out for that. Some quick currency overview. We will get to signals. Just bear with me, man. Maybe I'll just do 4 currencies and then we move on. Here's the pound. Here's the pound. What's the pound going to do? Gonna copy mother. Right, same thing. Let's go to normal candlesticks so you can see. Euro, AUD, pound, same thing. Break of structure here on the trend line, right? Now let's make sure I drew it. Yeah, very much happy with how I drew that. Right, markets show up on the other side of the trend line and signaling, a termination of the base structure. That's March of the 2020 COVID rally. Markets create the same bullish engulfing pattern. Markets go up, markets come in to test this thing, and you'll see your pound USD is pretty much done the same thing, man. Done the same thing, right? So pound USD, fresh with this demand, and we really want to see some upward push. All these squares represent, smaller supplies and significant levels. So that's there on the weekly time frame. That's what we want. But we'll go Akini Hashi so you can see it, right? So we want to see some type of push to the upside here on the weekly time frame, and that's when we want to start to expect a very strong downward movement, potentially on the daily time frame. For clarity, it looks something like this. Okay, on the currency index, you're going to see multiple gaps, right? So this gap needs to be filled. This is what I mean by, markets, bro. This is not cool for markets. This gaps, not cool. The gaps will always get filled, and gaps signal the greatest type of imbalance. But you don't want to trade the gap, man. You want to trade the supply or the demand that caused the gap, right? So a good sell here on pound USD, the actual currency, would be crucial. Would be very crucial. For those of you who've been taking the morning, my morning London sessions, you will know that on Friday, the last time I saw you on Friday, we spoke about a 1 hour time frame area where there was a potential demand, and on Friday there was a dead stop, right? A double bottom dead stop where markets just phased out to check for any stop losses, anyone's liquidity, and if you're there, you got chopped. Not where I told you to buy, but if you bought earlier, if you bought too early, like above that zone, then yeah, you definitely lost money, right? So you see here, right, market sitting tight, and we talked about waiting here in this 1 hour place, right? So I'm not yet triggered on this short-term buy trade, but this could be the trade, by the way, to push markets up to that daily supply we saw on BXY, on the British index, right? Which I'm pretty sure is this one, where there's that currency gap. It's the only supply valid, imbalance, nice market distribution before markets get up. So this is going to be a good place to sell pound USD, by the way. Signal number 1 of the war room, pound USD. I'm definitely looking to sell there. It's well worth it. Or for intraday traders, you can see the difference between swing traders and intraday traders. For intraday traders, you're looking to find your way up. And for me, the gray areas where we're all supposed to sell, I told you guys that I forgot, or I missed this particular beautiful sell. The only pound USD sell that I last was involved in intraday, was it a week ago or a week before? That was this one here, which gave us a beautiful 1:5. Right, so I sold here. I don't know if you guys managed to catch that gray area, but we marked this out. This was a phenomenal place for price to drop. Then we spoke about this area here on the 1 hour time frame as a cowboy area, but if you took it, then you're in the money. Just watch out for this, right? So I would like to see a clean sweep of any buyers down here. Now that markets have built confidence with retail traders that there's a support here, I'd love to see some retail traders waiting somewhere down here to buy again, and markets do a clean sweep of that and pick me up. and then we go all the way up there. So I'll be looking forward to this playing out in the near future. But don't forget the overall structure for our weekly swings, right? Pound has to play out the euro approach. Euro USD, you know what I keep referring to you guys as the mother trade still needs to happen. Markets have to break this demand. AUD has broken the demand. Euro USD has already moved from it, and then markets have to push a little bit lower. So you want to catch that daily supply, and you gotta rock with price all the way down there. That's going to be a good swing to make you a whole bunch of money. Right, in the last index that I'm going to look into, guys, because of time, although I wanted to look at all the currency index, is DXY. DXY, because you know we are a dollar-driven academy. You know, it's kind of like my fault today. Right now, markets, guys, whether you agreed with me or didn't agree with me, you know, about this nice bull run that we had last year, coming from a governing demand all the way to a governing supply. And if you're a student, I mean, this is a classic trade, man. You know, the FOMC pumped the markets up with talks of, yes, interest rates will go up one day. Markets price that beautiful rally in. Literally a year later is the first time now that the interest rates are actually going back up, and markets are already priced in the movement. I want to repeat myself. 0.25 basis point was first announced last year, that FOMC interest rate on the 16th of June, where it was after COVID. And FOMC was like, look, man, we had COVID in 2020. We've got QE right now, but we're going to have to move to, away from that, right? And markets priced in that. That was so good for the dollar. But since the first interest rate hike on the 16th of March of 0.25 basis point, I mean, yes, the dollar reacted positively for just 30 minutes of the day it was announced. But ever since then, markets have done nothing, because markets, are outside a governing supply. And so you're dealing with historic money now that was left there, mind you, in April 2020, right? All the money in this zone here was left here on April 2020. Right, so I'm looking at here, all the supply left on April 2020, and markets also have the Donald Trump supply just above it as well. Right, so there's a lot of sell pressure that the dollar index has to deal with. Our uptrend is still intact, right? But our structure is begging for discipline. Our structure is saying, look, man, what do? Do we discipline the sellers, or do we punish the buyers? Right, on the weekly time frame, right, we are at the makings of a bearish engulfing pattern. And last week, Friday, markets closed almost like a retest of that pattern. What does this mean? Well, it means if our trading rules are not manipulated and stand true, be careful, right? Be careful of some dollar weakness this week. Just be it's something to kind of like think, especially since we want to buy pound USD, right? I mean, you'd want to do that specifically if the dollar is actually weak. And the structure seems to be, hinting at that possibility. It might not happen, but I'm saying that on the weekly time frame, there's something to look out for. If you go to the daily time frame, you'll see markets have finally picked up the pieces and rallied all the way back into that governing supply, right? Some very close sell pressure right above, price right there, right? So it's definitely something to kind of like bear, bear in mind. If I scroll down to the smaller time frames, like the 2 hour, which lovely gives me like really great, perspective. We have markets that have been dealing with the war, right? Gapping left, right, and center throughout March. All those circles, they represent market gaps. It was the last one that I told you guys to buy in the London session. That worked out very great. And now, a big part of me wants to wait here for an intraday trade, right? I don't want to do anything else any higher, because we're so close to a supply, and we really want to see what markets are going to do. This area in general is all choppy all the way around, right? Markets have been in this zone, this particular supply level at the beginning for too long. Right, markets came back here, reset, markets came back, come back. So there is a good potential of a rally, like theoretically speaking. Be careful. But for the most part, you need to think like your governor right now until proven otherwise, right? But the first sign of, pullback from any type of sell thesis is if markets decide to break the supply here, which I'm pretty sure they will. because they've used up most of the sell orders anyways, and they've got a bullish engulfing pattern just close by. So you can almost guarantee that markets are about to rally into the zone, right? And then you want to catch the next supply zone on the left, on the H4 daily, etc. But right now, this area is now overplayed, right? Someone was seeing a head and shoulder pattern. I don't know if I'm ready to agree with that. But whatever you're seeing, just trade mindfully. Okay, right. So now let's look at some currencies, right? Now that you guys kind of like get a good sense of the land, let's look at some currencies. So the currencies for today are EURCAD. If you guys are okay, can you just allow me to just rock a little bit? We are a bit behind, but I am going to do my best to move as quickly as possible. Number one. Number two, I only want to look at 1, 2, 3, 4, 5, 6, 7. 7 currency pairs, guys. The ones that I put in the description, and then I'll release you, right? But I stop after 2 hours in these war rooms because people got to go, but I could go on and on and on, and normally I do. I have supper with my family, tuck my kids, and then I'm back in the office up until about 11 p.m. On a Sunday, and then I watch the markets open, and then I go to sleep. And the reason for that is I'm serious about my money. I'm quite intentional about this thing. Right. The last time we looked at Euro AUD, we spoke about selling. I'm pretty sure markets didn't come back to trigger us. I'll have to check the corporate account, but in my personal accounts, which are the accounts that I normally use for these war rooms, I know I'm not in any EURCAD trade. Right. But now this is beautiful, right? We've got a breakout structure everywhere in all types. You've got the break of the upward channel. You've got a supply doing damage. You've got inside the demands inside that channel being taken out properly, and that's important. You want to see smart money move the way. We're not speculative traders because we like to guess and believe we can tell the future, like, yeah, stock market crash will end 30 days, right? That's hard to do. And I don't enjoy doing that most of the time. What I like doing is the easy part of trading. All I have to do is to understand what those who can are doing, which is smart money, and then just do what they do. Right, literally understand them and then copy them. Right, now in the event of breaking the latest demand that price has just demonstrated, right, markets still have a tough thing to do, right? Because if we go with our rules, right, it's gonna, oh, okay, never mind. I was about to say, if we go with our rules, there's no ways we're gonna have an imbalance on time, but we do. Remember how you draw a supply, module 1, area of value, right? You've got, then you look at this, you got this candle here, you got that candle there, you got this candle there, right? And this is done, right? So the last 3 months markets have done a good job of creating a beautiful imbalance, right? So I can see that in my previous annotations, I've had a sell all the way up there, a sell inside this supply, and I hope you guys can see that there is definitely a governing supply here, right? A bearish engulfing pattern right there like that. And I don't even want to lie to you. I honestly hate levels like this because then I'm stuck between, taking an educated trading, analytical trade call and really a guess. And the rule that protects me most of the time is the fact that, well, you gotta always think about the highest selling point. But that works best for smaller time frames. Right now, in front of us here, guys, is a governing structure. So we really need to be mindful. Yes, still sell high, but also be realistic, right? Well, would markets, if they wanted to, right? Would markets really want to push price beyond another odd 500 pips just to trigger up there? And the answer sometimes is yes, they can. But you will only know the answer week after week if you are compiling data, COT. That's how you figure that stuff out, right? So if I see my euro is still stale today. You remember some people asking me, did Leroy say euro is still weak on the public Telegram group? And I said I want to quickly clarify that stuff in one of the London sessions. I don't know if that person attended it and got the answer they wanted. But just to be very clear, Euro USD, for example, is inside a demand. Demands mean buy. But Euro USD, to me, is seeking out a lower demand, the 3 months demand, the original presidential demand below it. So I taught you guys, and I said there's A, B, C. If I want to get to C, for example, I need to go through B. So if I want to get to the lower demand, I must break the demand that we're in right now. That's point number one. So I think euro will keep going lower. That's number one. But number two, show me where these guys are trying to buy euro. I can't see it. I can't. I'm looking, man. I'm like, okay, what about now? What about now? What about now? Yeah. Here they trap us out because they know that the euro is the most traded currency. It's very liquid. You don't have to beg people to buy or sell euro USD, whether they are right or wrong. I have to beg people to look at assets like Hungarian franc. I have to beg people to go trade USD Polish. Why? Those are easy things to trade, guys. I mean, if you look at the what we trade document that I teach on, assets that retail traders don't even know exist most of the time. So if I do USD, it's freaky. Those are all buy profile assets against the dollar or sell profile assets, and there is no debate. Let's look at US dollar, Russian ruble, and it's your broker. Some of your brokers don't give you these options, right? But I've done a good job of, oh, there we go. This thing was all the way up there, man. This was wild. This was wild. Right, so we're in an accumulation phase just before, a whole year before the war, and then markets exploded. And then it'll be like, well, what happened? What happened? Dollar versus ruble. Did we know that a war was going to come? No. I don't come to the charts to run a fortune cookie. I simply know that this chart gave us a heads up as early as the 1st of October last year that it's about to go down. That's all I can tell you. I can tell you that if I was trading USD Russian ruble as early as November, I would have found a swing buy and entered. The problem was there would have been an active supply in front of me. I would not have known anything about a war. I'd have just been doing what my structure is doing. But let's find, there was USD lira. There's so many, Swedish krona. I mean, there are tons of assets that are not that popular. There's USD versus the Polish. Easy to trade, man. Easy to trade. Not a lot of nonsense, not a lot of zigzag, just a clean uptrend. What more do you want? What more do you want? I mean, you get this stuff on arbitrage, you buy and you hold. I mean, I should have taken profit by now because I can see markets have terribly retraced, and I should check out on that later on. But what more do you want from this thing? Like there are many assets there, right? But I digress. We're looking at EURCAD, right? So my thesis was really study the charts, but more importantly for EURCAD, I see a lot of euro weakness, right, unfolding. EURCAD, as I've explained to you guys many times, and I'll explain to you guys one more time, oil is a big factor with CAD. So as long as CAD is strong, EURCAD will fall. As long as CAD is strong, EURCAD will fall. As long as this index that we did not look at here, CXY, as long as CXY is strong, CXY is an index, Canadian dollar. As long as it's strong, it'll fall. Is it strong? Is it strong? Is it strong? Yes, it is. The Canadian dollar index is absolutely strong. It's crushing it right now because oil is strong. This was last year when, COVID, when oil came from negative numbers. It's been on a rally since then, right? And then markets hit a supply. Look at how markets drop, right? They spend a lot of sell orders trying to remove a demand. And after that, all you see, week after week after week are these weeks of rejection. These long weeks are rejecting the downside. There you got another bearish engulfing pattern. It gets tested. Market's starting to pull up. Why? For the most part, CAD is strong. So if you have an asset like EURCAD, you really are betting on euro going down, not up, right? I mean, granted, markets must remove this supply, but it looks like they are working as hard as they can to do that. If they do, ladies and gentlemen, then my option call, I have an option call on oil for 150 and an option call for oil for 180. So I really hope I make some serious money there because, those are big risks. But then all my option calls are always long-term. I'm never wrong long-term. Or I try not to be wrong long-term. Let me put it that way. Right. So if oil does get to 150, 180 regions, then this is very, very possible for CAD, right? Apart from the fact that now CAD is currently enemy number one, in the crypto space, right? So EURCAD, guys, same sell idea that we've had for it, but now we're gonna adjust our entry because of the number of supplies and levels that have been created, plus a clean imbalance rule finally been followed. And to do that, I'm gonna start dropping. So weekly, I see 2 supplies. There's this one right now, 2 new, and then there's that one up there. I probably want to take some action up there. I probably want to take some trade ideas up there, right? And then there's this sell area there. So daily is really going to be some serious competition. Let's go to the daily time frame and let's have a look at what's going on. Right, so on Euro AUD, I know on the daily time frame, on normal candlesticks, there's a good supply here, which I've marked sell, and I'm pretty sure I already have a pending order in there. Right, but for the most part now, moving with the times, you know, markets breaking the structure here, markets breaking the structure there. This structure, 1, this structure, 2, and then this structure, 3. All 3 of these structures were broken by this supply up here. Right, so you know, it's become almost prudent not to ignore that, right? But then it's not the best level when you look at a Kinihashi, because a reaction to a previous level as well. So just watch out for that. I would probably take some money and risk there, selling somewhere up there. But you really need to be very smart about your stop loss placement. You've got that confluence thing working for you. You're inside a weekly, monthly supply, and all that beautiful stuff is going on there. So that's good. But for the most part, you know, by this white line here, you know, reeks some serious seller competition, right? Like that. All right, and I wouldn't put my stop loss anyway inside the zone because there's another bearish engulf and supply a little bit higher, right? But if markets fail you here, then we maintain our original trade idea, this one right there, just outside the highest supply, clean imbalance. And why I like it, now apart from the beautiful confluence with the governing chart, is simply the fact that it's fresh. You know, fresh areas of value matter, number 1. Number 2, look how close these 2 areas are, right? I bet you it's not 500 pips. Bet you it's less than 100 pips, right? Okay, it's 150, right? So that's still not 500, right? So you know, markets could have enough conviction to push price up without you, right? So really risk so you don't get left behind, but risk appropriately, knowing you could lose here, right? And then if you do lose, then I already have a pin in order there. I'll just be adding one new one here just in case, right? Markets should come and mitigate that area at some point, even though this is possible. So those 2 trade ideas on EURCAD are my top, you know, high probability setups. Now, this is the high risk setup. This can easily happen before markets even get up here. The problem with this area of value is it's far much more high risk. Why is it high risk? In module 2, we talk about the supply and demand curve. That can be explained and used anyway. Any supplies that are low on the curve carry risk. Actually, that prices inducement and exactly. I agree with Samuel, right? So just be very careful around this zone, right? I know they are cowboys. You know, cowboys are always ready to giddy up, right? But you know, me personally, I'm up there in the heavens, and then we'll see what happens. So EURCAD, that is it. Pound Swiss franc is the next chart for the day. Remember, guys, just got 6 pairs to do with you, and then you know, we're all free to go. I know it's 1:30, so you know, technically speaking, we'll be wrapping up now. But I thought get back to some basics earlier on today, right? So pound Swiss franc, there we go. Reaction to our first demand. I mean, I don't know if you guys remember speaking about this, but we definitely spoke about this a while back. You know, clean sell trades down there, took profit a long time ago on the sell trade, so I'm out of this. And now markets reacting from the demand. Now I don't know if I want to get back into this market. I'm going to delete this now. It serves me, it has served its purpose, right? So if I was to redraw this carefully from the daily, and I just jump to the daily, maybe we should start again. Let's kind of like give it a clean top down analysis. It's just that we've already, you know, made money from this trade idea. But anyway, let's not cheat the process, right? So we've got a couple of supplies. You've got this is definitely a sell profile asset. This is definitely a sell profile asset that has created a new low, and also a sell profile asset, to be honest with you, that doesn't really have a demand base, right? So that's maybe something to always consider, right? A lot of Swiss franc things that with Swiss franc, generally speaking, instead of having a sweet major turning point demand like a normal asset, you'll have a 52-week low, basically, you know. So this is April of 2020. All right, so price is still far from here. But if markets were to come all the way down to this low, you know, you could start to think about buying or wait to see if markets close low. But for the most part, This is the old, simplistic downward slope moving asset. It is the grandfather of just going down, right? So, and right now markets are reacting on a governing demand. I don't want to take that away from price. Markets are reacting from a governing demand, and so we expect markets to do what they're doing, rallying in. I unfortunately or fortunately, I'm not in the buy. I was in the sell a while back with you, but I'm no longer in the buy. Markets rallied into what I would hope would have been a good supply to hold. You can see buyers pushed up and sellers pushed them back all the way down here, right? So we now have a potential bearish engulfing pattern that is now being engaged, directly linked or very close to a demand, right? So normally, if that happens and there's enough orders here, right, enough orders here, markets could actually fall through, right? If there's enough sell orders, then the target is to remove this particular area of value, right? Now, for better clarity on the weekly time frame, you can see clean bounces on our governing demand. I'm going to delete some lines here that I just clutter with. Right, markets reacting for the last 2 to 3 weeks, making it all the way into the zone here, and can't see a clear weekly supply, to be honest with you. I know it's there, but it's just not the cleanest, right? So a Kinihashi would assume that the supply is this whole gray area dragged down into the yellow, right? So there's something like that. That's what that area looks like. If you're looking for, double confluence, right? There's some sell pressure a little bit up there. Now, for the most part, on the daily time frame, not easier, something like that. There you go. Markets trying to really push high, fell back into a daily demand. Let's go to normal candlesticks and we see for ourselves. Right into that bearish engulfing pattern. Now, it's like a, trader's choice here, guys. It's very hard to tell, because if you look quick case, you say, is that not part of assets? What's the best prop firm for funding? What's the best prop firm for funding? Okay, funding prop firms. I use I've done FTMO. They're crazy though, right? FTMO was just to test my aggressiveness. Sorry, I'm answering Simon's question. FTMO was really, their risk parameters are insane because of their targets. So the price and targets. But if you're good with indices, I failed FTMO the first time because fundamentally I was risking too little, and I ran out of not enough time. There was a 10 trade rule. And then when I started to risk, quite significantly with FTMO, but also taking trades on indices, which I knew would give me, a good buck for my dollar on those lot sizes, it then became very much easy to pass level 1 and level 2 of FTMO. So that one is okay, but it's annoying. And can I just quickly touch on this, by the way? Funding. Prop firms are great, guys, good ones. Anyway, there are a lot of trash prop firms. But here's the problem with prop firms, right? And it's something that we're going to look into in 2025, right? So I already procured a license for this, but launching, a 365 prop firm for traders in general for me would be silly right now, because I just can't manage it. I don't have time, right? So we've put this on a pin for 2025, right? We want to really make sure that the education program is now on autopilot by then, right? But now, as a prop firm, when I was studying this stuff, Samuel, look up something like 5% maybe, 5%ers. They're also quite cool. FTMO. I mean, I'm not really into that much prop firm trading, but they are quite decent. But just so you know, it's ridiculous, right? Prop firm trading is not for, and I don't want to discourage anyone, but prop firm trading, guys, is significantly cruel. And I literally went to my mentor to explain the stuff for me properly, right? So I see my mentor once a year in December. It's the only time I fly out of Africa to actually go do my one-on-ones and then sit down with my trading psychology coach and go through my statements for the whole year. It's a tough 2 weeks. But when we spoke about this, he really gave me a good picture. Here's the thing about prop firms. It's you, the trader here. right? And the inducement of a lot of capital. Okay, so you're going to use our capital and you're going to make us money, right? So you make money here by profits, but then we're going to set a couple of rules, and it'll be fine if the rules were this. If the rules were SL placement, if the rules were all risk management, it'll be great. Why? Because those are the only rules they need to be, right? But the problem with it is everybody puts a $sign on time. Time is the problem for all these prop firms. Time. They'll tell you that, well, you have to make a certain percentage gain within 10 days or 30 months or 60 months, and for the most part you think it's great. Hey Samuel, all right, cool. Samuel, right, man, always welcome, buddy, always welcome. Right, so now a certain percentage by 10 days, 30 days, or 60 days, depending on the prop firm. There are many prop firms out there in the world, guys. I can research and give you the ones I actually recommend. In fact, I'm not making any recommendations out there, Samuel. Let me first research, give me a week and I'll come back to you. I just know that I've had fun with FTMO, but I was extremely aggressive. I'd never trade like that with my own money is what I'm saying. Now, the problem with time is as soon as the time elapses, let's say you don't lose. So there are tools with prop firms. There is your maximum loss, right, which is always a very tight 5 to 10% of the account that they give you, which if you're very careful is almost always covers your admin fee to join them, because you have to spend like $300 or $400 with the prop firm to get access to 10,000 US dollars or something like that. But the stop loss placements pretty much make sure you only waste your money and never theirs. So that's the thinking. Number one is you're always blowing your money. Now, let's say you're good with risk management and stop loss placement and risking a lot, and you're waiting for swings, which is problem number 2, which I found. Because I'm waiting for swings. I can't tell you if my EURCAD swing is going to hit tomorrow or next week, Thursday, or next month in April. I can't tell you that. I can only tell you that when it does hit, I'll be ready to strike. So that's why I look at the markets every Sunday, and keep building, the swings. The problem is over a significant amount of time waiting for swings, waiting for the markets to swing, right, is the fact that you get timed out. And when you get timed out, you still lose your admin fee because you actually didn't make the company money. And so all of a sudden, the company makes an extra $300 from you. Now, the company makes $300 when you don't complete the tasks. The company makes the extra $300 when you don't follow their risk management rules. The company also makes the $300 when you follow the risk management rules and you manage to do the task on time, but you lose. You lose more, right? So it's a vicious cycle, man. It's a very vicious cycle. And so what we want to do as a board, they want me to do it next year. I said no. This year, I said no. But in 2025. What I'll do is, what I have to do is procure 3 licenses. I've already got the main one, number 1. And then number 2, I need to procure capital, right? So essentially, it's pretty much how I run my trading flow. And let's say we put about, I don't know, I don't want to give you exact numbers. Let's say we put about $1 million US, right, of capital. And what we want to do is then we divide this across traders. So we create package deals. So you can get a $10,000 US account, $20,000 US account, $30,000 US account. The only way we can do this as 365 and maintain integrity is to remove the time lapse. I honestly believe if prop firms did that, they would get better results. The problem is, I don't think prop firms care about results. I think prop firms have found a way to make money through these things, right? Because as long as I have a time slot on you for 10 days or 30 days, and if you don't achieve that, then I'm gonna keep, guys, you've seen some of our swing trades, they take like 3 weeks to get in. So the only right thing to do, in my humble opinion, as a prop firm, if I was to start a prop firm in 2025, would be there would never be a time lapse. Why? Fundamentally, because most of my traders anyways are swing traders. I create more swing traders. I mean, with module 3, maybe a year from now that will change, but historically I make swing traders because I'm a swing trader. And so what I want to see is, guys, here are the rules. Don't lose X amount, and we would like you to move on to level 2, so we give you more capital after you've completed level 1. How long do we have to complete level 1, Leroy? Forever. You take your time. You take 4 weeks, you take 6 months. I don't care. As long as you don't lose the maximum amount and you don't cost me money because you're being silly, I'm fine. And if prop firms did that, would have a better, situation, in the markets right now. But yeah, we'll do ours in 2025, my man. But yeah, sorry, I digress. But war rooms are for students. So if a registered student asks a question, I will deal with it, quite decisively. Right. So this is pound Swiss franc, but I can research for you good prop firms to look up to. But if your psychology is off, you will bend under the time pressure, right? So I've forgotten where we were here, so I'm just going to go back to the monthly time frame. Markets have hit a daily demand, blah blah blah. All right, so price is trying to potentially push up, right? We've got this one trend line, the white one, that I kind of like want to keep because it really shows the true breakup structure. Then we can remove the blue trend line, which I used for my entry whenever I sold this asset a while back. I no longer need it right now. And doing that will kind of like, clean up the chart a little bit. Now, guys, there are a couple of supplies in the zone that I don't think we can afford to ignore, right? So for example, there's a bearish engulfing pattern here. I'm going to mark them red for now so that they don't over camouflage whatever else is going on, right? So we've got a bearish engulfing pattern right there where markets really range, create another one, and then finally drop into the demand and then back up there into that zone, right? So somewhere inside the red, later on, we might delete the red because it's going to get annoying. Just be mindful of that. There's a lot of sell pressure there. Right, now on the weekly time frame, we get a little bit more clarity, right? Because there's 2 weeks, 1 week on the weekly, weekly and week candlestick wick filled. Second week not filled. So we've got market inefficiencies here for this week. Be very careful. Or, in a normal situation, you'd want the charts to fill this gap normally, so this could be a bullish week for this thing. If I go to COT for the week, and then I'm going to look at pound for the last 3 weeks. So I'm going to look at pound here. I'm going to see that shorts still dominated, but on still look at this, right? On the table, there are 13,000 buy orders for pound. Right, I don't know how many are going to go to pound Swiss franc, but there are 13,000 buy orders for pound. The week before that, last week, there were 8,000. What does this mean? It means there is an increment of buy orders on the table for pound. The week before that for pound, they were about come on, 12,000, right? So pound right now, because of that, remember that the bullish engulfing demand where pound is on BXY, following EXY AUD, right? Markets have to react from that level. So for now, I see more buy side potential. So, so those of you who want to trade this asset, just be mindful of that, right? And then what do I want to do? For the most part, I've been bearish. I sold down this leg as soon as we got a clean entry here. We spoke about this in the war room, so those of you who took that with me, good for you. And I'm still more bearish than bullish, on this asset. Right now, I'm allowing markets to do whatever they want to do. If you're very good with reading levels, you could get a short-term buy here as an intraday trader. It's very possible, but I definitely won't be focusing any capital here. What I hate is there's a supply there that's been beaten. The gray one, and there's a fresh-ish one here on the yellow zone. But if you look at this white line here, this white line by itself, I'll delete the other one. So the only white line left is signifies area of competition. You can see there's a clean sweep here on this PCP, right? So just be careful. Be careful of that kind of stuff. If we go Akini Hashi to slowly uncomplicate the process, you'll see that, maybe markets are going to go for a very, very higher pull. So still in the same supply, but just a deeper dig, right? Which for me is always better because I want my stop loss as close to the edge as possible, right? So, you've got this room to play with to the upside. But if I'm being honest with you, I probably won't be trading pound Swiss franc anytime soon. I don't like the levels. On the H4 time frame, you've got this world here where you think it's equal highs, but unfortunately, markets sweep a little bit higher. Take out some liquidity, create a new bearish engulfing structure and go back down. And now white line, this one here going down is my structure trend line on the higher time frames, right? Your area of competition shows you where there's a break of structure on the smaller time frames, H4, etc., etc. Supply was also taken out there, right? And then now you've got an unmitigated supply here. I mean, oh my goodness. I can't imagine the nightmares it will take to trade this thing correctly. You know, good luck traders. I'm not in. I'm not gonna, like, there's so many other things, so many places to make money. I'm not gonna scratch my head here, right? But just so you're aware of the dangers, this was a clean sweep for a higher play. There's definitely much more higher plays up there. Are they all fresh? Let's see. Right, so this level has already been mitigated, and then markets drop, and then that level was already mitigated, and markets drop. One would argue for here, but you know, it wouldn't be the best argument in the world, right? But I'm marking both zones as red. I want you to know I'll not be taking any of these trades. So if you do take them and you make money, good for you. This just look like cowboy trades to me, man. So I'm gonna wait for much more clarity. I'll be back middle of April for this particular asset. Pound JPY, my nemesis. Pound JPY, my arch nemesis. Let's go to the daily governing chart. Remember, we ended up finding both buy and sell levels. Look at that, right? So straight into the buy, markets rocketed all the way up into this secluded sell block area there. Goodness gracious, you know, I need to make sure. Yeah, okay. So this was a projected place to buy. Guys, I mean, I told you how I feel about this thing, but if you took the trades because you just trust your head trader, hey, then this buy did good for you, right? Anything JPY at the end, please don't forget there is what we call a monetary policy divergence, right? So if you come to the London sessions that I did a couple of days ago, I spoke about how Europe and pound are constantly increasing, you know, the interest rate hikes, right? So they are tightening their policies, whereas JPY keeps making the argument for basically being cheap, for having a weaker currency. They want a weaker currency because that's good for them, right? So because of that, you've got an asset, pound, tightening their monetary policy, strengthening the pound. You know, that definitely means that the pound will go up and JPY will go down, and that's pretty much why we marked out a buy idea down here on the weekly. If you come to the daily time frame, I should have taken it, man. I should have taken it, but I did tell you guys that, you know, my psychology is a bit off with a pound JPY, and also, you know, I don't know how generous you guys were with your entry points, right? But if I decided to trade this market, I might not have been triggered. Because I think my entry point would have been a little bit lower. All right, but if you go Akini Hashi, which I generally encourage you guys to do, always double check your. I mean, I've been using this in front of you for a while now, so I'm pretty sure to those who have eyes, they've seen, you know, its benefit, right? Because if what they do is they give you the full total average volume, right? And then you really get to see exactly what's going on in these levels. Complicated 365 candles, clean imbalance, markets come back, markets touch and buy, right? Man, I regret not buying now. I did, right? We marked out a small sell area here, but if you remember in the war room, I told you that markets would definitely most likely push higher, and they have, right? They've pushed higher non-stop. So that didn't work. That did not work. This has already worked with glass effect, so we're not even expecting this to work. And just before I remove it, you see the signals, right? There's always going to be a sign just before the day, so you'll be triggered. You'll be like minus 10 cents, minus $3. Look at the charts again, right? When price drops, because for markets, remember, a green candlestick always has to open at the bottom. When markets arrive here on the close, right, to trigger you, all this data will now be there. When markets trigger you, you can go back to the data and go, wait a minute, is that a bullish engulfing pattern? It is better to exit a trade at minus 10 cents than just to be stubborn, refusing to see the structure in front of you, right? So there we go. Markets create a bullish engulfing pattern inside a supply, and markets rally on, right? Unfortunately, no buying for me would ever occur in anything marked yellow, because all of this is that governing supply that's done a very good job of trying to hold its ground, right? But for the most part, markets have returned, right? So we did talk about this beautiful buy, and it's happened. And now we also spoke about back then the potential of a sell to happen here. And from what I understand about the markets right now is it's probably not a good idea to sell, right? And this is someone who has problems, historical problems with pound JPY. I mean, I haven't dealt with them holistically yet, right? So this is the pound. You can see that we want the pound to go up and then want to sell there on the daily time frame. We've been through this. It's the BXY, the British Pound Index. I'm bringing it back up again just so we're clear on the currency strength, right? So we're leaving a demand going back up. But if you look at JPY, all right, which is JXY for the currency index, right? You'll see the opposite, right? You'll see this thing breaking demands. Like it's breaking demands like there's no tomorrow. It's like, yeah, so what? Right, there was a demand there, breaking structure, demand there, broke that stuff down, and it's really entering very deeply in the month of March. I mean, if markets start to reverse in April, so if the April candlestick does this, that's going to be great, right? But then, you know, it'll be propping up for a long-term supply, a sell side until October, right? But this movement to the upside in April would allow for a quick change of hands, even if it's for like 2 weeks, you know, something along those lines. It would allow for better management of that sell position. But my thing is, you know, selling up there is deadly. All right. So now if you zoom in on the governing time frame, which is really, you know, a good place to understand smart money concepts. You also see people talking about smart money concepts, but don't even know the basics of top-down analysis. It is shocking, the stuff I see on social media. It is absolutely shocking. Right, if you look carefully at this chart, guys, you've got a beautiful bearish engulfing pattern that has done its job. That's number one, really. You only make money by unfilled orders. You only make money by unfilled orders. Where markets are filled or have been to, your probability starts to drop. This sell was for here, and it did a good job. Markets returned, more filling, lots of consolidation, a basis formed, order blocks. Too much is happening here for buyers. Buyers drew a line. You shall not pass. You shall not go any lower. That's what buyers did at this level. And then at some point in time, markets created a bullish engulfing pattern inside the supply. Right. So if I'm right and April starts off a little bit weak for JPY, we might see this candlestick drop. But just so you know, it'll just be dropping, you know, just to retest something, right? But for the most part, selling is no longer advisable. I am not advising anyone to sell here anymore. Even though we've just arrived at the zone and there's a potential that we could just make money, you know, I don't think it's a good gamble right now. What I would suggest is rather give it a week to 2 weeks. Let's break out of this channel. Right, let's close on the other side on the daily time frame. We'll start to see that stuff, and as soon as we pulverize on the other side of this yellow zone, we come back now as a team and we start to identify some strong good demands for long-term rallies, because the next target is further up, right? So we want to clear this week, right? There's a PCP and it's on the daily time frame. Here comes Monday, Tuesday, Wednesday. We want to do this. Cowboys are going to try and buy here. You know, good luck. Other cowboys are going to try and buy there. I might join them. And then other, you know, long-term swing traders are going to wait for a sufficient pullback all the way down there. You know, trying to match this area here. That would be good. And if we get something like that in the long term, that's a lot of money that we're looking at. That's a lot of good money on pound JPY. So once again, I'm canceling that a sell order, and I'm hoping somebody in the world made money off that buy trade signal that I gave a while back. And it's weird, right? We come back to these charts every week. Every week we come back and we see zones that played out, and someone will still say you can't make money trading supply and demand. Yeah, nah. Yeah, nah. Right. So pound AUD, we've been tracking this quite a bit in the you know, London session. For the most part, our trajectory has always been to the downside, and you know, markets are doing just that, right? So there's really not much, you know, to comment on. I don't think, like I told everyone else, I don't think there's a solid enough collection of demand in the zone here. It is on the other side of a trend line, bearish engulf, bearish structure, sorry. It's more like a weird triangle. Right, so that's the long-term structure, right? And if you look very carefully at the structure, if I can just delete this. If you look carefully at this structure, right, you know, for the most part, markets had found a bottom in 2013. We're in year 2022, all right? So the 10-year plan for this short-term uptrend, it really is running, out of steam, right? And it's difficult because this close in 2015 didn't close high. So we're still in a sell profile asset for the most part, right? This asset is more prone to sale. And now all of a sudden, markets have cracked outside of the triangle, outside of the structure, and are slowly heading to the downside, right? So I don't know what was being drawn here on the smaller time frames. We can find out, but we can definitely, agree on the matter of the fact that there's definitely a governing supply sitting right there right now. That's definitely happening right now, and that's the latest, most immediate area of value that's taking out structure. And the month of March, with about 3 days left, hasn't even started forming a significant wick. Right, there isn't a wick on this candlestick yet, right? So markets might push low enough to at least nick it, or but already we've already destroyed this area of value by 50%. And so normally, according to our rules, we want to see markets rally back into the supply for the month of April. So there will be some risky buy trades to take, right? Some risky market reversal trades to take, but those are not my cup of tea. Remember, markets don't have to do that. If they want, markets could create 1 or 2 or 3 green candles here on the weekly time frame, break the demand, retest those, and continue dropping, because what the governor wants to do right now is to sell, and that's all we need to take from this. We need to be selling, not buying. If markets come back all the way up here, to retest some rallies, that would be brilliant. But really, we're looking for, a very sustainable place to sell. And on the daily time frame, that place starts to present itself. There is the first one here with no confluence with the weekly, but it's there nonetheless. So it makes it risky. And then you've got a nice, beautiful peak area of value here, which is bearish engulfing. And to be honest with you, the colors should be different. So this should be red because it carries the most risk. And this should be yellow because it's a higher supply compared to the risky one, right? So I would most likely look for some play up here. On Euro AUD, I'll be looking to take a trade up here, and obviously just in case somewhere there, etc., etc. But you just have to play it by the week and see which levels get tagged. But for the most part, you're asking the markets a lot to return up here before dropping again, in my humble opinion, now that they've stacked up 2 to 3 supplies, 2 to 3 supplies. Right. The other thing that will help us make a cleaner decision is using a tool called the Fibonacci. Problem is now we've run out of a chance for a swing low. So the next time we get another swing low, we'll pull out a fib, but be smart. Right, technically you can draw 2 Fibonacci's here, but really one of them is the one that matters. You can draw Fibonacci from here, right, to whichever the new swing low is going to be, and just to see where things stand. But just be careful, the most immediate swing high, swing low is going to be somewhere here, right? So you're going to see your Fibonacci telling you to take a trade here, and I'm telling you that it's just too close to a demand, so I'm going to wait up there and have another signal there, and then I'll work on this chart by chart. Take a fresh touch. Watch out for any demands that are created along the way. You take property of those demands and you keep it moving. You keep it simple like that. You should create a nice process of cash flow into your account. Pound CAD, ladies and gentlemen, this is now we're almost close to the end. I appreciate your patience. You amazing human beings. If you're still around and you haven't left, it means there's something you're enjoying. Please do let the algorithm know by liking the video. I would appreciate that. By the way, liking my videos is also a sign of solidarity. Like, you are saying there's a lot of nonsense, market nonsense out there in the world, and you would like YouTube to push this stuff out. It's the only way I can reach people, to be honest with you. It's the only way I can make my one of my target goals, happen. Right. So pound CAD, once again, CAD is strong, oil is strong. When oil is strong, CAD is strong. So anything that is in front of CAD will fall. CAD pound is falling, clean sells up there. And now the question is, what do we do? What do we do? There was a daily entry. I know there was a daily entry. I remember the daily entry. Right, there was clean daily entry. Markets rallied in, markets almost zeroed us out, and then I don't know if you guys took profit, but unfortunately I took profit here, got out of this trade because it was indeed approaching daily demand, daily supply to daily demand. And now Like those of you, if I know a lot of senior traders took it and got out as well, but we are looking for entries now. Now that we realize that, well, we played around, markets we're still keen to sell, then we've been forced to really negotiate with all these levels here with price, right? So that's what I'll be doing on pound AUD. This was almost a stop loss hit, by the way, very tight one. I think at some point I'd actually given up on the trade, and then the next day markets actually rallied or pushed to the downside. Right, but if you're not in it, or like me right now, if you're in it, hold. By the way, if you're in it, hold. Right, governing time frame. That's your take profit. Keep and make all that money for yourself if you're in it. Right, but if you're gonna look for a re-entry, be careful, because we don't always want to take a re-entry sell after making contact with fresh, hungry buyers, right, in the markets. We really don't want that, right? But unfortunately, we don't dictate the terms of price movement. So we're going to have to see how markets move, right? And so my take is probably wait here, and let's see what happens. Markets haven't come back. It'll be the fresh take. And it might be worth the risk waiting here, even though markets come from a demand, but I highly don't advise that. And then the problem with this supply, as you can see for yourself, is just very close to another supply. I think this is silly, right? Doing something like this, unless if you're going to go 0.01, it's quite silly, right? Rather keep your risk allocation quite low, and if you get stopped out, that's fine, then try again, right? Just simply try again. But definitely, try your luck here, but you really want markets to retrace before touching the green. But if the governing pressure is overall a sell, then this green will be removed one day, right? So it's well worth the risk of using that to kind of like do something like that. Over here, I'm doing nothing. I see what you see. I'm doing nothing. I don't care for what's there over here. I am not interested at all in the zones here. I'm literally going to do nothing. All right. So if you get caught up here, it's not me, right? But I mean, I'm looking at plays in these two zones here. I think this area has now been overplayed, so I'm just going to ignore that, right? But just watch out for oil and the sentiment, right? Oh, really? So I'm just reading Samuel's comment. There's a new, oh man, I thought I was going to be the first with this idea. That's my problem. I announce my stuff, and also I always have such a long-term futuristic date, right? So it's called Mint funding with no time limit, right? Then that's better. That's better. You want to make one target, meet one target with them, Mint funding, and then process your withdrawals. And if they pay you, then you're golden, buddy. You're golden. There's just no textbook, with these things, But I do know they make a lot of money by getting good traders, and also a lot of money by getting bad traders, right? So they just make a lot of money. Right, so that's pound CAD, pound NZD, which is our second last asset. Then we're done for the night. I appreciate you guys being patient. And since I'm not doing Monday live sessions, I promise this week I'll upload a second war room with different assets, so that we really have a better spectrum, right? So just to say thank you guys for following. I will do that. I will do that. Right. So, nothing too crazy here. Supplies. Markets are dropping, breaking smaller term demands, and a big part of me feels like, markets could come back down there. This is just not that, asset that has shown, tremendous strength, over the years, right? It's failed to maintain any highs. And so the sell pressure is quite real. So, as a swing trader, this is really the first time I would even think about, getting out of these trades is somewhere down here. All right. So the problem is pound NZD right now, as I speak, I don't actually have an active trade. I don't think I do anyways. I'll have to double check. Look at this. So this is like the first sign that governor means business. Remember, this is why we trade along governor, right? So markets didn't even bother to stop at this potential demand. Quickly took price out. Markets went, further to the downside. I don't think this will hold. And this whole area here is written off to fail, right? So there's nothing really on the left, on the serious left at least. I mean, maybe here. All right, so that's already been tested. Markets have come through into that zone. right? Fresh touch, retest, right? So that's if you're in it, you know, that's your. But God, this was good money, man. How did we miss this? Wait, I took this trade and got out early. Intraday nonsense. This is why. Okay, all right. Well, life, all right. No, it's fine. Life is tough. Right. So the daily time frame, man, you're looking at this. So now, if that zone, this two white lines, you know, permitted and operate, I really, really, really would suggest, you know, something like this. I really would suggest this. I know we ordered supper in this house tonight, but I can smell something burning, and I know my partner's on the other side of the house. Maybe it's outside. Maybe someone's making a fire outside. Right. So there we go. So that's the first time I'll try. Nothing here. Too much competition here. It doesn't make sense. You know, but you really are looking at a situation where maybe the sellers window, you know, they will get tired soon. You can start to see some seller exhaustion already. But if they do something like this, this will be a good trade to take back down. Why back down? Like I said, there's still a lot of room to the downside in terms of where price is actually going. So that would be sell number one. You wouldn't believe I took a piss just there, just literally a couple of, you know, a nice sell order. Yeah, for intraday it was good, but then, you know, you take this intraday trades, I find, and then I move on, and I forget about, you know, life. You know, and I never come back to check what's going on. So beautiful sell trade. Markets went back up. Fresh area of value just above. Markets have been selling off ever since. And all of this, I'm not in it. How unfortunate, right? But that's my speculation for pound NZD on the daily time frame. And then the last one, ladies and gentlemen, pound USD. Shake my hand. Thank you so much for sticking around. We've been together for about 2 hours, 30 minutes. You guys are amazing. Once again, last announcements, there will be no London open session this week. Please let me just get through the backlog. Let me do the last 7 videos for module 3. Let me tighten, let me release stock notes. Let me just get my life together, man. I need to read the Canadian executive order and then move forward. I also want to see which exchanges are going to be targeted, because I know there are like a couple of people with wallets everywhere. So I want to have a comprehensive list of what to look out for where you're investing your money. Remember, if you're in a hot wallet, then these things do matter. If you own a hot crypto wallet, but if you've got a hardware wallet, a cold wallet, then it really doesn't matter. But yeah, we need to have an open, candid conversation about all these things. Right, pound USD, guys, we've been clear about this one. We want to do what Mother did. So let's go back to the monthly time frame. Right, we've got a bearish engulfing pattern here. No, a bullish. Where is it now? Right, we've got some type of nonsense going on here. All right, so let me find it. Just give me 2 seconds. Let's remove this. Oh, by the way, this is just saying 631 pips for price to drop, which is a lot of money. Right, so that's a lot of money. You really want that. But so you've got this March recovery here, March 2020, then markets based out, then markets rallied up. Then you got this, bearish engulfing pattern, which technically speaking becomes the 365 candlestick if you think about it after the rally, because it's no longer supply, because the supply was broken, right? So somewhere in the zone here, you've got some active buying, right? Active, strong, institutional buying right there. See that red candle there? Right there. And that's where pound USD is right now. So what you expect is the same thing that happened with Euro USD, where when markets got up here, they went up a little bit to the next available supply and then made contact with that supply, then came back down. And you can see that pound USD is currently going through that. You have never disappointed in any war room, so I just like it. Blessings. Thanks a lot, man. Thank you so much, Mr. Lincoln. Thank you for the compliment, sir. Appreciate you, man. Appreciate you. I always get worried because I do spend a lot of time and I don't know what people want to do with their lives. Right. Thank you, sir. Thank you so much. Right. So there we go. Right. So this is strong to the upside. Markets come back in here to this demand. Right. So markets are, I find it interesting. Right. So pound has a lot of options, unlike Euro USD. When Euro USD was at this level, it had to go back all the way up to the supply that started the movement. Right. But pound has had a lot of, bearish engulfing patterns, imbalances, some rejections. it gets a little bit clearer as you go down. Look at this on the weekly time frame. I'll remove these arrows just to make it clear for you. All right, there's clean levels. I don't want to delete anything because it will affect what my charts look like on the daily. But there's a nice level here on pound USD on the weekly time frame. A good place, a really good place for a swing trader to camp at, right? I mean, maybe coming all the way up there is a dream, right? This was just for a long time ago, but right now, you know, this is a very good place to look into. I see in the gray area there must have been a daily trade call as well, right? And that's where markets are. So markets are outside the zone here, just playing mind games. Imbalance rule here is very dodgy for swing traders. I'm sure for intraday traders on the 1 hour time frame you'll have fun, but for swing traders the imbalance here is dodgy. Be careful, right? So and then in the zone here, which was that weekly area, you know, that did well. You know, you might also have competition of looking for something reliable. Reliable to me is always fresh. Right, so you can see here that's the first time you get a real imbalance, and markets kind of like chill and then markets break down, right? So both sell areas are going to come with some type of risk. It's not going to be easy, is what I'm trying to say. It's not going to be easy. Then on H4 last time frame, I'll only go as low as H4 for swing trade clarity. You know, you get this gray area, which I said is very dodgy in terms of the imbalance. Right, inside the zone, you get a bearish engulfing pattern, tested, retested, price comes back up. But the only mitigative area is this yellow zone here. I think that's why I've marked it up, right? It's the first one. So I would not sell here, definitely not on H4 if I already know that there's a higher supply there. And remember, pound USD, there's a 1 hour demand zone, which I'm hoping will be the good place for markets to rocket from. So just watch out for that. You know, there's a 1 hour demand zone, something like that, and that's the trade idea, you know, for now, right? But if this yellow zone gets cleared, there's nothing in here that I think is well worth, you know, trying out. Then we let this governor push markets all the way up there, you know. But yeah, that's pound USD, and that's everything, guys. Everything in terms of markets for me this week. You guys were amazing. You let me go through what was in my heart. I appreciate you. Thank you so much for watching. Shake my hand. You know what you want to do this week on the channel, because there won't be London market live sessions. The few videos I will drop will be important. My final thoughts on crypto will definitely come out this week. Stuff around NFP, ADP will definitely come out this week. And then obviously, you know, the announcements, we'll do a YouTube video for that stuff on how module 3 will look, how the portal will work. And that's really what the focus has to be this week. April, I'm taking a sabbatical from the trading floor to get teaching done. So if you're a registered student, module 4, we're doing it live. Module 3, you get upfront. Module 4, we're doing it live. We're doing trading psychology. I want you to be able to look me in the eyes in the month of April when I start my module 4, so that we are absolutely together on this stuff. Right, love you guys, love you long time, man. I love the academy, I love everyone in it. I love, you know what we do together. You know, everybody have a beautiful week. 365, man. I'm signing out. Cheers, everybody. Goodbye. Shake my hand. Goodbye.